Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. 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 Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Hit the like button. Hit the like button. Like. Hit the like button. 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 Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Hit the like button.
Hit the like button. Yeah, yeah, yeah. Rocket Scooter. Hit the like button. It's catchy. At least it's a good pump up, right? We're trust me, the media we got coming out for the stream. Oh, wait, hold on. Seems a little dark in here. Turn on the lights. So, you know, the stuff we're coming out in the morning show, it's gonna have like extra, you know, flair to this so this experience is gonna be somewhat fun. I have all these visions for 2025. I have a ton of visions for you guys. You should sing the whole song. Okay, ready? Hit the like button. Yeah, yeah, yeah. Rocket Scooter. Hit the like button. Don't. Yeah, yeah, yeah. That's it. I mean, I think I did a great job. Wait, Master Rich, you call? Wait, Rips is streaming already at 7:30 in the morning. What's he doing? Get up early. He called you a genius. You are a genius. I told you. I tell you that every day. Clip it, dude. Clip it and post in chat. You tell him where you came from. So that's right. We have a whole team of Einsteins over at the Rocket Scooter stream. We're all we got all the smart people come over here. All right, let me make sure I got everything ready to go for the day. Nvidia earnings today. This short, yeah, remember the market's dead. We talked about it yesterday. This market's dying. This is a bear market. It's turning into it. It's not all the way there yet, but it's turning into it. Who can't, not yesterday's stream, yesterday's Zoom call. You guys come to yesterday's Zoom call, right? By far, this market has, as of, 2 months ago, I posted this was the end of the bull market. And then it started getting signs of bullishness again a couple times in there. And then finally, it's starting to pick up the signs of trying to be bearish again one more time. Now, it all hinges on Nvidia earnings right now. I calculated that the S&P could move roughly 150 points due to Nvidia's impact alone on what the expected range is supposed to be. And we determined that from monthly maps. 150 points. Just one stock. Like 5,800 to 5,850 S&P strictly on Nvidia. Do you guys understand this? When I'm using the theme songs, oh, we're gonna make something really cool. Trust me, we're gonna make something really cool for the morning. So 5,850 is possible. Nvidia can have that much power. Now we've already priced in. Hopefully, the part is we've already priced it in. The market's been moving down the last 3 days, and it's probably maybe effectively pricing that in already, which is about the move that we got. But the market has that much volatility built into for Nvidia. It's massive. We talked about this. It's ridiculous. You know what I'm saying? So the signs are really here. The monthly maps, we reviewed the monthly maps from December from the video. Let me see if I can't show you guys a clip. Let's show you something really fun. You may show you something really neat, how awesome we are at this. I'm going to tell you guys, we have the best tools. It's by far. It's almost weird and magical how good our tools are. The stuff that we can do with our tools. Let me show you something that's going to literally like break your brain, okay? Look. This is from our 20 days profitability mindset masterclass. And this is Microsoft Windows Media Player sucking ass. So we'll try this one more time. Hold on. There we go. Okay. All right. So this is a class of monthly maps. We covered this yesterday. All right. Hold on one second. Let me get everything situated here. Speaking of ETF, hold on. Hold on one second, guys. Let me get everything going here. Let me... Give me like 5 seconds. Don't go anywhere. Rocket Scooter. Yeah. Hit the like button. Rocket Scooter. Yeah. Hold on. We gotta log in here. Don't go anywhere. Don't go anywhere. We're still here. I forgot to like log in all my stuff here. I only just gotta like hide the screen because, you know, you guys can see my password and stuff. It's, I mean, everyone knows I love My Little Ponies, but don't tell anybody that because, you know, it's embarrassing. Perfect. Are you ready to go for the session? All right, you guys ready for this? Monthly Maps is a tool that we have that can look into the future. It's clairvoyance in the market. Nothing out there looks into the future.
Monthly maps. QQQ.
I use monthly maps to call major market pivots. On this again from our classes. Okay. I have a tweet that I saved, and I love showing off with this. I need to make a new one to show my continual showing off of how awesome this is. But I called the top here, the temporary 2-month bottom. I even time it 2 months here. This is the bottom for the year here. This is that 2021 recession. I use monthly maps for traders to pivot that market like this. And let me show you what we did in January. When we were doing this class, let me show you what we did when I was just teaching this class.
Show beautiful.
Hold on. Let me just show you guys something. Okay. So this was in January 24th, and we covered this. Let me show you really quick. It's a video. Okay, monthly maps allows us to see the distribution of risk into the future. Okay, into the future. It's everyone's options that exist and where it's going. Now I'm gonna draw you something pretty neat to show you how scarily accurate this was. I'm talking like this is gonna blow your mind. And 1 second. It blows my mind why this doesn't go all the way to there. There we go. All right. Pencil tool armed and ready to go. Please take a million years to load up here, sir. Come on. Where is my tool? This is by far the coolest thing. All right. It's like every time I try to, maybe it's on the screen. I just don't see it. I do have a million screens. Oh, let me delete and turn it off and turn it on. I think I have to turn my pencil tool off when I play Call of Duty, and because it screws up the screen. We shall try one more time. All right, is it popping up anywhere? Aha, there it is. It's just blended in. Okay, so something that's neat about to blow your mind. Ready? Hold on. Let me. Come on. Get ready for y'all. I'm gonna wait for a couple more people coming here before I start. Okay, I am about to blow your mind with how good this is. Pay attention. At the start of the day, we print out this distribution of risk. It's called monthly maps. This is for SPY. This tells me the state of the market. On January 24th, when I ran this, we can see all the way into April 15th, whatever this is right here, April or April 20th, whatever. What I can show with this is the distribution of risk and how people are viewing the market. All inside information, all information, everything is priced in already at this point because everybody is always buying insurance based on their positions. Now, it's part of our greater market analysis. We do 3 things in the morning. Let me show you what it shows. Number 1, this is what it did show. There is a bull market through April. Okay, but hold on. This is actually at like January 20-something, 24th. Bull market through April is what it shows. More bulls through April and selling about February. There is some selling wave in February. So in February, there's a wave of selling, okay, a big one. When they slope up like this, it's a selling wave. Fewer bears through February and shorts are starting to build after that. So this is where shorts are starting to build, okay? And volatility for 1 week, which is what we would show. I'm sorry, volatility 1 week out. So stable volatility 1 week out, and then big volatility in February. Big volatility in February. For whatever reason, this little hole in the middle of monthly maps, okay, is a huge volatility wave with shorts building, right, and bulls liquidating leading up into it. For some reason, at the middle-ish of beginning to middle-ish of February, this volatility gets abnormally crazy on that rollover in VIX. In January, we saw this. I'm going through the class yesterday and I was like, oh, that's kind of cool because I was teaching people how to analyze monthly maps. All of a sudden, I'm like, there's big volatility in February. Like, watch out. Something weird is happening. And some selling at the start of February, right? Something's starting to happen in February. And in January, the market's already pricing in what it wants to do. It's insane how crazy that is. And let me show you something. I mean, this is something that, you know, you kind of want to see, right? It's so crazy how this works. And, you know, just to kind of bring back what it looked like in January. And this is exactly what we do here. So January 24th, which has been here at the high, literally at the high, right? I'm going to walk you through play-by-play of what I wrote, okay? Now, again, I changed my stance because I no longer see the bull market. The monthly maps spell out something different. And we talked about this yesterday in our boot camp. Our boot camp, who here, by the way, in this YouTube stream, goes to the boot camp? Just show of hands. Everybody say, no trades overnight. I didn't do anything. So everybody say, I'm at the boot camp. And tell people, if you go to the boot camp, can you guys tell everyone here what you think about the boot camp? Did you get your dollar's worth? It cost $1 to go to this class. Literally, it's $1. That's it. Okay, so at the top here, I say, okay, we can see a bull market through April, more bulls through April, but some selling in February, fewer bears through February, but the shorts start building towards the end of the month. And then 1 week out, volatility and big volatility in February. Okay, and as we approach, right? I'm sorry, this was in January. I was at the wrong spot. Here we go. There it is. That's where I said this. Okay. So selling as we approach February, which is here, like it's chill. And then there's the selling as we approach February. This is all February right here. Okay. Volatility week 1 and then major volatility towards the rest of February. Big, and I say big volatility. And that's where this started coming out of nowhere. This guy right here has changed the market. Now, whether we're pre-pricing in Nvidia's earnings, which is true, I've calculated that Nvidia can have about a 150-point change in the S&P, but the expected range of Nvidia. How do I know the expected range of Nvidia? I could calculate it with monthly maps, just the same. And then I apply that to the market cap weighted calculation of the S&P, and then I can calculate how much the S&P is going to fall. All right. Look at this. Big volatility in February, and we're at the end of February. Just like a big volatility with exclamation point. It's scary. That is scary right there. Okay, so we could see the volatility a month in advance. And people price this in futures. This is the best part about the market in futures. People price this stuff in. And I'm going to show you as there's a little bit of difference of what we're experiencing now. I'm going to tell you guys, the bear market is starting to come. I didn't ever think I'm going to say this, but it is dangerously close to tipping over. And there's a couple of signs you have to pay attention to. This is just volatility spikes and coming down in decay. This is absolutely different. I want you guys to tell me, my boot camp friends, tell people here they need to take these classes because it's going to be something that they're not going to want to miss. There's a difference between the volatility trading higher, the volatility spiking up on Trump tweets and decaying. Volatility is still decaying over the month. This is how you know you're still in a bull market. When you open in contango and you close lower, open in contango, close lower. This is characteristic of a bull month. Hold on, wait, let me go over here. Characteristic of a bull month that's just sensitive to news. That's it. Anytime you're in contango, it's characteristic of a bull month. And you trade down, that's a bull month. This is what a bull month. This is a bull month. This, by far, is the first time we've seen that big volatility in February where VIX is actually trending higher. This is dangerous, what we're seeing, okay? And we saw this a month ago. And even in the class, we were talking about it. There is something afoot that you have to pay attention to. Like, don't sleep on this. This, by far, now I've taken some licks for the last 3 days, but let me tell you, I'm not going to sit there and bag hold if this market starts to tank out. Now, I'm going to tell you today is probably not the day we're going to collapse. I don't think we're going to collapse today or anything. I think the market's going to be pretty stable as we pre-priced in, getting ready for that big explosion on Nvidia. So like we've been trading down as Nvidia's earnings is probably pricing in something. I calculated about 150 points of change for the S&P, and it just so happens we've moved about 150 points. So this is the single effect of Nvidia. So whether it's moved down to allow the blast to kind of stabilize inside of there, be either case, that's what we're doing. All right. So let me read you the maps now. You're like, ah, that was a cool trick. This guy figured something out. Very cool. The maps are really neat, right? But what is he saying now? Is this just a one-trick pony, or is there another? Let's see what does it say now? Now again, monthly maps in the Rocket Scooter platform is a tool that comes with our platform. The only people in the world that's ever done anything close to this is we paint out the landscape of options to give you the ability to see some things further out in time. So what I think we see today is I think that we still stay inside of this range. But then tomorrow, dude, it's like the market is ready to fall. And I'm not saying this because I want it to fall. The market has received unusual pressure, and everybody here feels it. All of our traders are really smart here. Everyone feels this shit. It's crazy. And so let me explain to you why I can see this. All right, remember, we hate bear markets. My saying is that I find liquidity and I long it. That's how I win so many trades. That's how I do so well as a trader. I find liquidity and I long it. 85% win rate doesn't come from the fact that I'm longing and shorting and longing and shorting. I wait for liquidity and I long it, and I get it right almost 90% of the time. And that is absolutely true. You guys see my stats. I post them every single day. I am the best person you'll watch on YouTube, stat-wise, for sure. Like, better than the next two put together. My humbleness aside, watch we see right here. Whenever you have the asset managers and commitment of traders in S&P futures in decline of the net long position, they are liquidating their position. Didn't we say that? We will see some selling in February. This is that selling in February that we called in January. All right, number two is hedge funds shorting a little harder, and these things are a little bit more short. This blue line is more short. We also said that from the monthly maps. So when they're both sloping down, the market is highly illiquid. When market is illiquid, liquidity is the inverse of volatility. So the lack of liquidity allows volatility to happen with adverse amounts of selling and buying. So the inverse, it's inversely proportional. So because we're lacking liquidity, there's an excess of volatility. We all understand. You guys understand that, right? Volatility is like the amount of V'ing the market does, because buyers and sellers are kind of more distributed like this instead of like tight right here. So whenever both these lines are sloping down, it's illiquid. Everyone's selling. So the market is slightly illiquid. Everyone's shorting, everyone's selling on all camps, right? And the market makers have to compensate by accumulating a net long. You see how the red line is getting more long because everyone's selling. And so that lack of liquidity at the top here is allowing the market to have fewer buyers, so more scattered. So the selling is received a little harder with that little inertia to keep the market from moving, right? Inertia, I remember from physics, is like the resistance to like moving something because of, physics. You remember physics, right? Okay. So this particular shape shows illiquidity that we have. Illiquidity, 1 over liquidity is equal to higher volatility. As the market has moved into the new VIX contract, not too long ago, we've rolled into the next month. We're experiencing that volatility. So like I showed you guys, This structure of the VIX is very damning to the market already. Normally, you're going to see the VIX like in decay perpetually due to a bull market. Volatility just decays. People overestimate negativity by buying additional volatility longs, and then the market just fades it out when that volatility isn't present. Typical bull market. You start, so remember, volatility futures price in the VIX by the end of the month. And usually people overestimate the likelihood of a crash. And that's why the market VIX always decays, because think of it like this. Everyone buys auto insurance, right? But not everybody gets in a car crash. So it's like everybody's going to buy the insurance, but not everybody gets in a crash. So the insurance just basically like fades to here. Everyone buys the insurance and it doesn't pay out, which is what means you think something goes down, it didn't pay out. So everyone buys insurance, they were wrong. Everyone buys insurance, they were wrong. And that's what happens in a bull market. Everyone buys insurance and there's some couple of spikes, but they're wrong. Ultimately, when you're in contango and you decay, and the closing rollover price versus the open price when you rolled into that contract, anytime you're in decay, that is characteristic of a liquid bull market. You can go back to December and January and look at the COT, and you can see that the part of the market is that the asset managers are increasing up through December and possibly January. And then here, when they're fanning out like this, that's liquidity. It's really good. And then when they're pinching together, that's also liquidity. But the moment they're both trending down, which was around late January, early February, that is illiquidity. And illiquidity is characteristic of a bear market. The bear doesn't mean the market will sell off, but it means if the market starts selling, it can't handle the selling, it's going to fall. And the last time we saw the commitment of traders move like this, that's when we entered a market like this. Okay, so keep in mind, illiquidity is going to be bad news. Now, I don't know if this is going to last for a long time, but we need to start catching a bid here. I mean, as you see, there are periods of like waves inside of here. And don't worry, stay on the stream. I'll keep you guys weeks or months ahead of this stuff. So don't waste your time like watching some goofball, yelling and screaming at you. If you want to learn something, this is where you're going to learn it. And this is free. So, I mean, I'll still yell and scream at you like a goofball, but at least I'll teach you something while I do it. All right. So, like here, we're in contango, yet the VIX is trending higher. That's different. The VIX isn't spiking higher. It's trending higher. And the craziest part about that is you don't usually see that unless the market is starting to slowly build something. As you see, when we rolled over on Friday, the VVIX has moved to 108. This is a very sensitive region. Whenever this is like this, the VIX is extremely sensitive to news, which means the S&P is exponentially sensitive to news, right? So VVIX is the volatility of VIX. VIX is the volatility of the SPX. So the SPX higher volatility you can expect with equal pressure of selling, that the range just gets possibly wider. Now let's look at the monthly maps and see how bad that's going to get. You guys ready to have your minds blown? So back in January, we predicted that February was going to be absolute dog shit, but April still looked bullish. Let me tell you what it looks like now, because we don't have that bullish till April look on this thing. This thing looks substantially different than that video. Let me show you what this month has done to this thing. I know I'm waking you guys up by busting your heads with the science lesson, the math lesson here, but it's good. It's good for your soul, man. I promise. This shit will put hair on your chest.
So today's class is the...
Shut up, Matt. All right, let's show you. Shut up, Matt. Okay, here. So you notice the difference, right? QQQ is nice and clean. The bull side, I mean, it just shows a nice bull market. But again, QQQ starts to show growing volatility in February. The higher the space, the bigger the volatility. And let me show you what March looks like for the QQQ. This is alarmingly bad. And this is what we saw in January too. Now, while we showed you that February looked a little weird, look at March. Okay, does everyone see this really quick? Do y'all see this? Do you see liquidity is where the bulls and the bears are close together? Does everybody see what March looks like? Does everybody see what March looks like? And you just threw up a little bit. Did you just pee your pants? Are you literally like changing your pants right now because you just peed your pants when you think that February is bad and you look at March in the QQQ? Do you see this? Do you see this pre-priced in volatility in March and you see the VIX slowly creeping up? We called this in January. Literally in January, it is alarmingly volatile. And Yeah, all out of pants. I know, me too. Like literally see the VIX just slowly climbing up with 120 VVIX. Like what the hell is going on? This market is priming to dump. Do we understand that? And I'm like, yeah, oh, Matt had a couple losing days. And right, I made 17,000 whatever dollars yesterday to make it back. But listen, the point of what I do that does so well, that I'm better than everyone else that you guys watch or have watched, is that I find liquidity and I long it. And then if I get wrong 2 or 3 days in a row because the market's bearish, guess what? I know that now. Most people are looking at now trying to find the dip on the way up. And maybe today might be a nice big green day, but tomorrow and the day after and the day after, this market is still looking at that volatility. And let me show you what it looks like now. This was in January that showed you that March was going to be absolute dog shit as far as volatility goes. And let me show you what March looks like now and what April looks like, okay? The market is having a very, 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 very hard time finding itself. Well, there's that nice little distribution of the bull side getting stronger. Look at this. The bull side is getting weaker and the bear side is getting stronger. When they slope up, that means selling. When they slope down, it means buying. Okay, so in this particular case, they're selling. And then from here, there's like a weird period of stability with maybe some volatility. But then after that, the market just gets these like waves of bull selling. Bulls are getting out of the way and bears are strengthening through here. You can see this bear zone starting to form. I'm going to circle it right here. Actually making them red so it's easier to see. Right here, the bear market is starting to formulate here. And where we are right now is bearish through April, which means this is a high. At the top of these bear zones, okay, you can just see that the market is positioned right now for this to be the high. Does everyone see this? So when this is the high, it doesn't mean that's going to happen. News can change anything overnight, but this was the map yesterday. If this is the high, then the market waits a day, 2 days, and then it flushes, okay? And then it starts to like fuck around, and then it tests this before it gets on the way down. Have y'all seen this pattern before? We've seen this plenty of times, right? This is like 2 years ago. So if this happens, again, I'm not saying it will, but this is resistance. We're in bear territory through April. We've got major amounts of volatility starting to peak up in here. And let me show you something neat too. So if this flushes out like through here and then kind of like does whatever and then makes its way back up to there, the market's going to have insane amounts of volatility for a little bit. It can do this. Not that it's going to do it really bad, but I'm really horrible at drawing, but maybe 1, maybe 2, maybe 3 waves down. And this could be a quarter or 2 quarters worth of bear correction. It's coming, guys. Like, so I'm not going to sit on my hands and like buy the dip for the breakout rally. I've changed my mind as of now. This bear market is back. And yesterday we had 3 signs, right? We had this liquidity map looking like, monthly map looking like shit. DD dipped below half for a tiny little bit. And the S&P, bless its little heart, held on to monthly hedge pressure. And I took that trade and it was worth a whole lot of money. However, monthly hedge pressure should be very far away from the current trading price of SPY. You know this because if you know the effects of time decay and theta, is that this monthly hedge pressure at the start of the trading month, which is the 4th Monday of the month, usually looks like this. You start here and monthly hedge pressure is really far away. And a nice clean bull market, if the price were to stay flat for an entire month, monthly hedge pressure just kind of moseys on closer to it and gets closer to it. Each one of these is a day. So every day you get right up into it in the last week of the month. And when I say month, I mean trading month, which is the 4th Friday until the 4th Monday until the 3rd Friday. So right now we're in the 1st week of March trading month, and monthly hedge pressure is right up against SPY. What should happen like 3 weeks from now is literally happening right now. We are testing that break point. And if we lose monthly hedge pressure with that shit monthly map, we're 1 step away from losing DD. And that's when we enter what I call a greater bear market. So this is different than the last waves of selling we've had. And I'm not trying to scare you guys because you know me, baby. I make my living trading bull. Remember, I made like fantastic amounts of money bull in this market. This is not going to be that market. Does everyone understand? You're here to learn something. Did y'all learn something today? You know shit's going down when Matt's super bearish. Okay, it's all there, and you can't say, "Oh, well, now he's a bear because it's trading down." No, I wasn't a bear. I wasn't a bear the last 3 months with this shit happening. I didn't. It was nope, still bullish, still bullish, still bullish. I said volatility's coming, but bro, I made like so much money on this Tradeify stuff. And you saw me nuking it. And all of these days, most of this is green, right? And so it wasn't like that was anything other than, and this is where I actually posted that I said, the bull market's over. I made that post here on that Fed day. I said, that's it, because that was enough to kick it. And while I still had bull waves in here and I wasn't bearish yet, I never said I'm a bear, except for this one day here I said I'm bearish, and it could be for a day or a week. And then after that I said, nope, not bearish yet. Now I am telling you guys, as of yesterday's breach of DD and our closeness with MHP, if Nvidia does not save this market, Nvidia alone is the catalyst to turn us into a bear market. Now, again, I calculated Nvidia's expected range. Oh, let me tell you how you do that. Okay, ready? Watch this. This is really neat. So you can use this to expect how much that weekly range is going to be. Okay, so the distance between the widest space on the monthly map is the expected weekly range on the most illiquid spot. Now, let me tell you that this is Thursday. Why would Thursday have a very, very, very large amount of volatility expected? Because Wednesday, today, remember this is yesterday's print, we'll get a new one today, we'll analyze it the same way. Wednesday today is Nvidia's earnings after market. So everybody's prepped for Thursday morning's chaos. And this 610 to 570, I'm going to say 575 range is the expected weekly range of the S&P based on the volatility that's present. $450 points on the ES. Divide by 2 is 225 up and down. Okay. We've already moved some of that distance. Okay. From roughly about 6130 to here, we move about 130 of this. Okay. So the 225, we move about 130. So that leaves us with roughly 100 points, give or take. Now, again, wherever we are, that's 100 additional points total. So if Nvidia has priced in that particular distance, 225, we're about almost halfway there. Do y'all see this? The market has another 100 points of move today alone. Today alone. Literally today alone, 100 points of move to wrap up that volatility for the week. The range to span, that distance is that range. That's the range to span. It's insane. QQQ. Okay. QQQ has kind of already priced a lot of that in, but 538 to 528, it's 400 points. So as you see, we've already priced a lot of that in, but you can see S&P is the telltale sign of the bigger range. Nasdaq has already kind of like accepted its fate. So I'm telling you guys, Nvidia is a catalyst that is likely to blow up the fucking market. Guys, look at Nvidia's next week. Look at this. Look at this. Look at the space. Look at how much volatility is planned for literally next week. You guys see this? That's how much, that's the absolute lack of liquidity in Nvidia. Do you guys see this, right? It's blowing my mind how it's in front of our face, how sensitive this market can be to Nvidia. Now, again, volatility just means space, right? Span of buyers and sellers. So it can go up that much. It can go down that much. We already moved 130 points down this week so that we can absorb the 100-point blast up and still maintain that bear market that's coming. Sure. That's likely what happens most of the time. So if Nvidia gives us a 100-point rally in the S&P, that's totally cool. I'm not flipping to the bull side just yet until the maps clear me for trading. But do y'all see this? How much points in my common stop loss? 10 points S&P, 40 points NASDAQ. But do you guys see that Nvidia is planning some shit right now? Again, it is trading in a bear market, and it's extremely volatile in some of these areas. Just have nonsense volatility. And so the market is inching that volatility in right now as we speak. Just up, 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 up. So people are at the highest peak of their uncertainty with Nvidia right now. 10 points S&P is risky, but the average daily range of the S&P is like 40 points. It's not even close to risky. Do I use market or limit orders? I use market orders because I'm a day trader. Can you use the options chain one standard deviation range of the weekly or expecting moves also? St. John, yes, you can. Monthly maps is more accurate. Monthly maps is going to show you the distribution of that options risk of the dealers, where the real bulls and bears are. And what I'll tell you is that when you measure the expected move between the spots, look at this, between the bull side and the bear side, especially on Nvidia, right? 145 to 130, it's 100 it's 15 points on Nvidia. You can see that the amount that we've already moved is equal to the amount of the volatility. You see they're roughly equal size. Pretty neat. You can transpose that right there. So this actually shows you the expected range for the week. So likely showing if Nvidia is a huge, it's already pricing in the bad news is what I'm telling you guys, which is good. Nvidia's already moved the expected distance. Isn't that neat how that works, John? Our monthly map is a next level tool, and it does, this is all based on options, by the way. We just do something a little bit better. We can identify where liquidity is and illiquidity is. This is illiquidity and this is the liquidity on both sides. The higher the space, the higher the volatility. And don't let me be the first to tell you that this is really bad. This is extremely bad. This shows that Nvidia after this week has the potential next week to literally fall 32 points. And that's telling you that Nvidia, even right now, may have underestimated, traders are underestimating now the impact. Because 32 points is roughly 20% drop. And we saw Meta do that a couple years ago on earnings. Nvidia is pricing in possible 20% volatility. And you heard that here first. This week, yes, but look at next week. Imagine a 20% drop in Nvidia, what it would do to the S&P. Nvidia alone can crash the market, and I hope this is clipped. Very, very, very much on the fucking edge right now. And Matt is never. I wait. People meme me because I'm mostly long in the market, but people don't meme my win rate because I mostly crush the market too. But it's very rare when Matt's bullish. I remember somebody said, I said something like when the market was bearish in December, and somebody posted like, you know, when Matt speaks, listen, because it's rare that I do this. You never see me flip flop. I usually give a good, you know, well thought out speech whenever I do start to preach the warnings. And it's not because three, you know, red candles have me scared of this market. No, I'm still going to long the market when I find the good long setups. But let me tell you, you're going to expect me to lose a little bit more. I'm already accepting my fate, and I'm going to start trading very cautiously. And I'm already going to start trading smaller. Now, I don't think today we're going to get any kind of weirdness as far as the market goes because we're waiting for that big bump at the end of the day. I'm going to tell you something. Anything can happen. Anything can happen, y'all. We have huge range between hedge pressures on S&P. We have nice little setup there. We're really close to DD, nothing really there. Trust me when I say the market's going to open, I'm going to let it fall. And hopefully I can find a decent dip to buy. But man, just this kind of move is just really scary. The market's prepping for bear market, y'all. Prepping. All right, everybody hit that like button. You got 4 minutes. Thumbs up at the bottom left. I'm going to sit here. And meditate while you do that. Y'all have a chore today. And it's called hit the like button. Let's get it up to like 300 likes. You got 400 something people here today. Y'all like that free lesson? Y'all like the free fire we're spitting? Y'all want to hear the hit the like button song? I know you do.
Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah.
My call is like, dear God, no. All right, y'all are funny. Okay. 3 minutes till market opens. If I get 300 likes, I'll turn the song off. How about that? Once is enough. I don't like it. I love it. All right. The faster you smash the like button, you get to 300, we'll turn it off. Trust me. So we played Rich. I don't know if you were here yesterday. We played your song at MHP. So we've determined that Rich's song has magic powers. When we play Rich's song, the market pumped up and moved. When I played Rich's song here, we rallied. And we determined that your song has, it's like from the Twilight Zone, it's like the magic monkey hand that when you make a wish, like one of the fingers curls up, you know? And so we get like 5 wishes with your song. When we play it, it's going to turn a bad trade green. So we got 4 more wishes with your song, Rich. So I'm going to let you guys call the shots. When y'all say, when we can play Rich's song, you say play Rich's song. It'll give us 5 wins with a 100% win rate. I promise you guys that. So Rich's song is that good, it pumped the market up. It went bullish because of his song. All right. When is the crowning ceremony, Smirk? I want to make something. I'm trying to make something for you guys to really celebrate it. We're gonna probably have it done by next week. So, yeah. So we already had the winners of the song contest, which is cool. Okay. So in this particular case, guys, listen. Get a little cold here. Leave my hoodie on. What? Okay. All right, let's buy some dips. After all that speech, let's find some trades. Let's go. Yeah, Nvidia can move about 20% today. 20% on Nvidia. That's insane. Monthly maps show you that, dude. That's the best tool ever. All right, and we're gonna see what the maps we get today on, right? So right out the door, resilience is a mixed bag. I think that the market's gonna be another wick day. Barkey said it in chat yesterday. I always agree. Barkey's really smart at the longer term stuff. He gets the levels and supports. So a wick day, right? The market's not gonna be decisive today. The market's just gonna wait out this Nvidia earnings, y'all. Boom, boom, boom. All right. What do you think about DD band below MHP? It doesn't matter how far it is below MHP. You want MHP to be far away. That's definitely what you want for a bull market. You want MHP to be far away from. You want to be like well above it, like safely in the positive gamma territory. You definitely want that. Ooh, EST on S&P. Dare I? Oh, this happens like every freaking day. Why not? Why the hell not? Let's just be fun with this. Okay. Just on one. I have to take it. I have to take it just to hear. I have to do it because it's statistics. Okay, let's do QQQ real quick. I have to. It's just a scalp. Trust me. Just a scalp. I gotta take it. Nasdaq's doing the sandwich again. Oh boy. Oh boy. Okay, so yeah, upward moves today. Negative res though. It's gonna be a little hard to watch this move higher, but we'll see what we get. Tiny little scalp. Okay, can you like load up the candles, bro? Come on. Nasdaq is good here too. EST. That's pretty nice. Kind of get a 10-point run on this right up to 58.90, 59.90. So this ain't bad. Again, it's bearish-ish market, but I do have to take the stab. I have to try this every time from here to here just for the run. Res is on the fence here, so it does likely want to fill the gap. We might get some overshoot here. I'm just tapping it with 2. I'll take about $500 of drawdown on this one just to trade it up to there. Now, again, I have to take the trade. If we lose this, I'm out. That's basically easy as that. If this market crashing out today, probably. But we'll see if I can get the bounce first. I always got to take the liquid trade. Bears on the bull zone is a really strong contender for a good trade. One of my favorites to take. But like I said, I'm right on the edge. And it's only from here to here, and I'm going to close. That's it. Let's get a nice little green to bump this. We'll see if we can get some run here. Resilience is positive. That's good. That supports the trade. I like it. I like it a lot. – You see right here, 590 is the set. Let's make it the risk here. It's just a scalp. It's 10 points. This market ain't rallying today. Just a scalp. All my alerts are pretty decent. Yeah, they looking good. All right, yeah, good. Let's hit it with 3. All right, let's see what we get. Hit the like button. Yeah, yeah, yeah. Rocket Scooter. Hit the like button. EST. Yeah, yeah, yeah. I play Rich's song, but I don't want it for 10 points. I need Rich's song to dig us out of a hole, though. A bad one. So right here, little pump up here to 58, 58.90. Let's get that little liquid trade. I always find liquidity and I long it. From here to here, close out. Pretty nice. Res is greater than 0. Not bad. Not bad to start the day. That might be my only trade too. Need the DD. Yeah. Yeah. It's low. I told you guys the bear market's coming back. 0.39, right? All right. Greater market. I trade it with the medium when DD is less than half. So this is my medium. Remember, I'm trading 5 to 10 contracts now. Greater market. Number 1. DD. Less than half. Bear market's back. I gave you the whole speech today, and you got the indicator for that. Number 2. SPY's still greater than MHP, which means it's still trying to hang on in there, but it's not that great. And let's go ahead and do number 3, monthly maps. Is it terrible or not? Okay. Number 1, DD less than half, very bearish. SPY greater than MHP, very bullish. Monthly maps part 2. Let's see what we get. Yeah, yeah, yeah. Rocket Scooter. Where's that volatility? Ooh. Oh, that's bad. Oh, this is really bad, guys. This is even worse than yesterday. Ooh, big waves of selling after the week after this. Stable this week. Week of selling coming up. So the market's stable here. No big change. But boy, oh boy. Woo, that is straight liquidation and straight volatility to follow. Well, guys, I'll see you in the summer when the bull market comes back. This ain't good at all. This is fucking crazy. Don't you guys love our indicators, how good they are at this thing? Like literally, and I mean, I'm still longing. Give me that long, baby. But still though, I'm getting the fuck out of the way in like 20 minutes. Like literally done. It looks very nasty. Eric knows. It looked really bad. It does not look good. It does not look good at all. Waves of selling, very bad. Volatility immediately falling after. Very, very, very much good. Let's get on this bull trap. Let me ride the wave here and then close out right on that first peak. And then we'll call it. Okay, ready? Let's get up there. I'll take the free. Let's get up close to 90. I'll take it. Almost there. Come on. Hit the bull zone. Hit the bull zone. Yeah, yeah, yeah. Rocket Scooter. Hit the bull zone. Let's see if QQQ is like even more gnarly. This is going negative again. And QQQ is just insane right now. Look at this. It's kind of all over the place. Bear zone, bear zone, bear zone. And then there is like big pockets of like just bulls are just vacating this. It's not good, guys. Rocket Scooter, yeah, yeah, yeah. Hit the bull zone button. Hit the bull button. Yeah, yeah, yeah. So again, I take my every single time trade. I find liquidity. Ready, guys? This is like a game show. Rocket Scooter. I find liquidity and then the audience goes, long it. Right? I find liquidity and long it, and I'm done. I'm the best ever fucking do it, guys. Literally the best ever fucking do it. I'm out. I'm out. I find liquidity and long it. That's it. That's it. That's it. That's it. I'm done. That was easy. All right, day's over, y'all. Let's have some fun. Well, I get the exact timestamp so my guy can clip it. That was fun. I find liquidity and I long it. All right, I'm done. That's it. Hit the bull zone. We're done. The market shit on itself today. I'm so funny. Okay, guys, I got more stuff for you, so don't go anywhere. Day's not over. But that's it. All right. I gotta send my guy a thing. That's pretty easy, right? You'll like the saying, I find liquidity and I long it. Okay, look at this. How much is that today? Easy peasy, right out the door, and I'm done. You guys know why I'm done, because this market ain't going up. That's for sure. But that wasn't bad. How much money was this? Not bad. Let's go ahead and like put this right over here. Now I'm done for the day. I'm not gonna touch this anymore. I'm not gonna sell this. I'm not gonna short this. I'm just gonna know that I'm smarter than the average trader. And while they're figuring out what to do, I already did it. Right? So that's the goal of what we do here. Is I'm first to the most of the trades. I'm not trying to be in the trend. I'm not trying to be whatever. How much profit was that? This is my funded accounts. So this is 1, 2, so this is around this to 9, 18, 38, $4,500 profit. In how many minutes of time? Like 6? It's like, let me tell you something. There's magic to what I do. Ladies and gentlemen who have taken the boot camp, why don't you tell some of the folks here that's their first time why I did what I did. Let's see if you guys can teach the crew. When you learn better when you yourself are a teacher. Why did I do what I did? Why did I hit it with 3? Remember, my new normal is 10. I've changed my thing with Tradeify. I'm trying to get $150,000 profit with them straight there as fast as I can. So I can kind of milk them for the full amount of the live account. Why did I do 3 based on my normal 10 now? Right? And why did I get in and get out where I did? Why did I do what I did? I want to ask you guys a question. Teacher is going mad today. I find liquidity and I long it. I need a soundboard though. I really do. I need to like. I need to find myself a soundboard. I need to make one. And I need to be able to push buttons and have it say those things. Does it give you a stiffy? I don't know what does. I know, right? JK is giving you guys. Oh, so we're gonna do a contest. We're doing a giveaway. Okay, let me announce this to everyone right now. That's really awesome. Okay, so I got a couple more ideas. Profitability mindset masterclass. Awesome. Somebody donated a $19.99 class. So this is a whole month in the boot camp. And I'm out of the way before it falls. Are you guys ready to learn day trading or not? Who's ready to learn something? Yeah, so like there's, there's something, there's like a little bit here. Okay. Yep, let's talk about the market today. You guys ready to learn something or what? How'd I do? How did I do? How did I do? Pass another 150K. Oh, baby. Let's go. Well, not best. I'm not completely bullish. Exactly. ESG trade, DD less than half. So medium rather than normal. Out bulls on bone because we're at, God, you guys are fucking awesome. That's it. All of our stats today, especially those of you that new in the boot camp. How often do I take this trade right here? Every single time. Every single time I take this trade. Every single time. Every single time I trade. And when I find liquidity and I long it, this is liquidity pocket. I scalp here every single time. That was $4,500 for 3 minutes of my time. So from here, I don't care what happens next. It doesn't matter. I could be done for the day in this amount of time. That was an easy trade to open a liquidity pocket. This is my favorite setup. My normal is 10, and I take this trade. I hit it pretty hard. And again, I have a guideline here if you guys want to learn how I do this. Here's my guideline. Ready? This was the trade. This shows you all the trade setups. We draw it at 9:30, and then I take it. The market opens. I do this. So this is a liquidity pocket. I long from here to here every single time, no matter what the condition. I just either hit it with the normal or I hit it with the small. Okay? If this ratio is greater than half, then the stocks are bullish. I'm going to hit it with my full 10 contracts. Baby, I'm going to hit it hard. If this ratio is less than half, I hit it with the small. Right now, my small is roughly 2 contracts, 2 or 3. So my medium is 5, my normal is 10, and my small is like 2 or 3. It is literally textbook. I follow my strategy. It gives me the guideline. I don't go in there and do anything else. I find liquidity, and I, as the group says, along it. That's it. So that's a pretty solid scalp. Sometimes it's the only trade you need to make. Now, do I want to short this for the rest of the way down? No, I don't care to do anything. The market is extremely bearish, though. This is not good. Not good. The stocks themselves are bearish. Not good. SPY is above MHP. Thank God. We still have that monthly gamma supporting us, but it's so not good. On the way down, there's a lot of issues that we're going to be dealing with. Again, if we break to the bull side, that's great. I'd love to see a bull side run on this. There is another trade I can take. If it does go above here and does decide to support here and build volume, I can take the long from 88 to 20. It's roughly 3-to-1 trade. If I want to risk this and throw a contract at it, I probably could do that. So we're going to wait to see if we pick up some of that bull momentum. And right here, maybe I'll risk it in just one account. But I don't know. I got to get some confirmation there. Resilience was less than 0 as well, as somebody had mentioned a little bit ago. I did get to fill the gap and walk away. Now, S&P is still pretty decent. Nasdaq is not. So the box is going to get some resistance, especially in QQQ, because we're filling the gap to the downside with negative res on Qs. So again, very big transitional market. These liquidity pockets are my favorite setups. Here's a LP. Let me show you where I find liquidity and I long it. It's there, and it's there. And that's basically it. And there's liquidity down in here as well. So some of the better setups today are to find NASDAQ from like there to here. That's a really good setup. This is a great setup, actually. Great. I'm going to hit it with a small, though, because the resilience is less than 0. So I'm going to hit that baby with the small. If it falls, I'm going to scoop it at monthly hedge like I did yesterday. I don't want to inch up on this because I know the bear market's coming. I feel like it's silly to chase along here. But it doesn't mean I'm gonna short this either. What I'd like to see is I hope there's a bear market that drops in a liquidity pocket. Take a long again one more time. When I win money, you will donate. There you go. Man. So I wonder what we got to do. Keep our numbers growing strong. You guys are awesome. I really, really, really appreciate you guys being here. Helping grow the stream. Keeping the numbers high. So stay here as long as you can. Help us out. Hit the like button. Share the stream with your friends. We are growing so crazy. It's insane. All right. So if you like what you see and you want to learn what we teach, you ready for this? I'm about to give you the greatest deal of your life. I promise. Somebody even donated. One of our members has donated this to you guys. If you like how I took that scalp right now, I'm debating if I want to throw a contract at this. Let me show you guys something really quick. So, if you guys want to learn every single thing that we do, we give you liquidity maps. I show you my position sizing criteria. I show you where to find liquidity along it. I show you where to avoid the market when it's bearish, all this kind of stuff. This masterclass. By the way, I'm about to sell you guys something because I'm a shameless salesman. But let me show you something. You ready for this? 20 days and our boot camp is $20. It's $1 a class because I'm really not trying to sell you anything. It's $1, so you take it seriously. There are 20 days where we train you on this. We're literally on day 4 or 5 right now. The videos are pre-recorded. You can watch, but you can tune in with us. And let me tell you something. There's a reason that these people are buying the class to donate to you guys. They love it that much, I guess, apparently. So somebody has donated $20 for someone to join. You get to join for a free month on the house. You will be trained in day trading for free. If you don't win the contest, it's $20. And you guys can go read the reviews from all the people on YouTube. This is exact customers, what they bought, what they like. So a whole different way of trading, easy to learn, execute. New traders can learn step by step from a series of detailed videos. Absolutely mind-blowing, game changer for my trading. Again, these are honest reviews people wrote. I can't endorse what they say. Deep knowledge of trading, market mechanics, excellent distilling down for that class content. Instead of teaching traditional trading courses, this is important. This course focuses on teaching the mechanics of trading, taxes, fees, information about CME Group, everything. We go in everything in here. So, amazing insights. After you watch these 20 days, you will never see markets as random again. Rocket Scooter is great, straightforward, understand options, mind-blowing concepts. Excellent. Only place on the internet with this info. 5-star, 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 5-star. We have thousands of graduates from our program. Okay. I'm going to tell you something. For $20, you out there like a bunch of fucking degenerates paying thousands of dollars a month trying to figure out, I'm only a step away, I might get funded tomorrow. No, get an education, guys. Look, I walked up to this Tradeify and immediately started taking money from them right out the door, and I'm still doing it. There's a trick. You don't know the trick. There's a trick the pros know that you don't know. There's a trick that we do to do this right. You might think you're a step away because you're trading up and down, whatever. You're not. You're really far away from your goals. So hopefully this boost will push you in the right direction for what you're trying to accomplish. Learn this game. There's a reason I do what I do. There's a reason I got in and got out here. There's a reason everything I do has a reason. Nothing's gambling. Everything is pre-scripted. I draw on the chart. I do what I draw, and then I wait. I wait for the next setup. What happened to the FFF prop saga? Did I get the statements? I never did. Now let me hold on. I keep getting like teased with it, like, hey, I'll send you the statement, but I never have received it. Let me double check. I don't see it. Unless I've overlooked it, it's never been sent to me. Look, let me explain to you guys something, okay? I'm not going to be the judge of this because I haven't seen the exact stuff, but Pat already blew it up, okay? Like, and posted it. This is what was delivered in Danny's own thing. Hold on. This is from Pat's Twitter. Now, again, I'm not validating anything because I never saw this. This is from Pat's Twitter. This is what Danny posted. He posted a video. Again, I'm not trying to get in the middle of this. I was promised broker statements, and I never received them. And he keeps quoting, he keeps saying, I'm going to send them out, I'm going to send them out. When he's arguing with Pat, I'm going to send them out, but he never did. But what he did was he posted this. He posted this thing where this 9 and that 9 look absolutely different. I mean, I'm a forensic scientist here, but this is what I'm saying. One of the 9s looks like this. One of the 9s looks like that. Okay. So, yeah, so I'm going to let you guys know who, and man, so yeah, all these content providers make content out of this. I was at ground zero with this. Okay. I was in the middle of all of this, and now all the content people are running with it. You know who discovered that the 9s were different? Again, this is my work that people are doing. Fucking getting views off of my shit, but okay, that's fine. I'm the one that come telling people this stuff. Pat came up with, Pat and all of us were talking behind the scenes about this. We had all the influencers, everyone else is running with this stuff. Look what he did, look what he did. I'm like, oh my God. I don't want to be a shock person, but anywho. These are our ideas, and they propagate, and then other people make content out of it. So anyways, right, when we saw this, it was like, does this look suspicious to you? And I'm like, yes, it does. Like, immediately it does. So I'm not accusing anybody of anything, but this is absolutely different. So, right. I can't accuse of anything. I haven't received anything myself. That is from someone else's delivery. This is from Danny's own video. So yeah, that was it. That's a 9 and a 9. A 9. Yeah. So in either case, yeah. So why would he change his numbers no matter what they were? He would be positive. Dude, it's I know why. That's the thing. Can I tell you guys? I know what happened, and no one else knows what happened. I know. Danny called me. We talked for an hour. And again, he told me what really happened, and he's told 2 people what's really happened. The other was his partner. He told his partner what happened, according to him. I'm going off of what he told me. He's not, and so I learned the whole story, and I'm waiting for him to tell the story. He made a video and said what he wanted to say to you guys, and I'm still waiting for the statements. Like I said, it's not my job to report or to authenticate, or to judge. It's my job just to authenticate what's given to me. People trust me as the math guy, the source of, you know, like logic, reasoning. I'm not going in there for a witch hunt. I'm going there to like prove something. And I'm going to tell you something. I'm very much disappointed that I haven't received anything. But yet in the comments, when Pat was busting him and all that, and Danny's like, I'm going to send it to Matt and verify, okay? And Matt's going to verify. And Matt's waiting to verify. It's been a while. So you guys figure out from there. In either case, like I said, I don't think this, you know, this is, you know, and he's already stepped down from the firm or whatever. But, you know, if you guys are willing to try funded family or whatever, you know, it's like between you and your desire to see if that fund pays you out. Remember, these prop firms, as a risk manager, it's not like I'm not promoting them. By the way, I'm not an affiliate. Let me tell you straight up. I'm not. This is just straight from me as a trader who's trying to help you guys figure out this world. Your job in the prop firm is 2 things. Number 1 is to see if you can beat their game. Okay, that's it. Can I beat their game and how can I do it? Number 2 is, are they going to pay me out? And you have to analyze their decisions on a merit-only basis. Is this where I don't care if the carnival is a fucking scam and I can still beat their system and steal their money? What better way to like get, if you think it's a scam or you think whatever, what better way than to get back at them than to take their fucking money and put it in your pocket? You know, I don't see it like, oh my God, it's a witch hunt. I can't use their service. If you don't like them, go steal their money. Go beat them at the fucking game. Your job is to find out, can I beat the game? That's all that matters. And number 2 is, are they going to steal my money? These are the things you need to decide as a trader. So I don't care if, you know, if Danny's lied, didn't lie, it doesn't matter. Like to me about the prop firm, can I steal their money? That's all I care about. Or are they going to steal my money? That's the goal of prop firms. Can I take their money or are they going to take mine? And whatever way they do it, are their rules too hard and not worth my time? Or are they going to just steal it and shut down? You have to just make that decision, right? Now, again, I clearly don't trust somebody if they're doctoring things to present to the public. I don't trust anything they say as far as that where we're healthy, we got payouts, whatever. So I'm a little skeptical, but I know people that get payouts and it's a super easy process. And people are saying, and somebody actually just said that right now. So just received your first payout and it was a super easy process. I have heard through the grapevine that a lot of people have a great experience with them as far as prop firm goes. So as far as it's worth, your job is to say, fuck these prop firms, I'm going to steal their money. That's literally it. I'm going to take their money from their pocket and put it in mine. It's a game. We're here as traders to beat the game. We're not here to side with the prop firms. Oh, let's do work with the prop firm. Oh, you're my buddy. Let's get you sales. No, I'm here to take their money. As much of it as I can. Selling their shit to you guys, I'm going to take their money. Beating their game, I'm going to take their money. My job is to take their money. They're sitting here saying, I have a game and I'm handing out money if you beat the game. And I'm saying, I'm one of the greatest fucking people to play the game. If you're giving out free money, I'll take it. I have to make sure you're not going to take mine. That's what I care about. I'm one of the best people to step up to the carnival. The guy's holding the softball. It's like, yeah, step right up. Step right up. Knock up the milk jugs here. Get yourself a teddy bear. I'm like, bro, Major League Baseball. Come on. It's down here. Is it 10? Yeah. Let's wait for it. But anyways, your job is to take their money and put it in your pocket. That's it. That's literally your job as a trader. And your question is, are they going to take yours first? And you have to make that risk-based decision. I personally am not afraid to throw a few evals at them and see, just to see if they're next on the list for me to trade against. I'll be fine. I'll be the one to test that out for you guys. Why not? But I'm not going to do an affiliate arrangement with them unless they do two things for me. Number one is they can't be associated with the trade room that simultaneously is giving direct trading advice from the owners. The conflict of interest has me not want to work with them in that particular sense. I don't believe in that ethically. But number two, and it's not like they're doing anything wrong. They just didn't think this through. You shouldn't have a trade room and a prop firm at the same time. That makes sense. One of them wants traders to win. One of them wants traders to lose. It doesn't. It's just not a fair playing ground. But number two is I need to prove that I can get a payout, and it's effortlessly. And then at that point, I'll just do it to see if I can get a payout. That's my goal. To see, I'm like the guinea pig of this prop industry, to see if it works. If I can get payouts. So for you guys, I'll go waste my money before you waste your money. How's that sound? But yeah, I can't really like affiliate or promote somebody directly if they personally are sitting there as the owner giving trade advice. Day to day, like call outs and follow my trades and come to my Zoom call kind of thing. And loosely speaking, all your prop firms have a Discord. All your prop firms have, a community where traders get there and tell each other, what to do. But it's not like the prop firm owner is like, follow me in my trades. That's a line I'll draw. ETF has a Discord. They do it just fine. ETF's Discord is run by people like us, just community members. People go in there and post whatever they want. It's a free-spirited, open-ended forum. That's allowed. I think that's not a conflict of interest. But if Kaizen was sitting there saying, guys, everyone long the market right now, I'd be like a little bit like, okay. And we're breaching that realm of trust where we must be neutral a little bit, right? Well, I love ETF. I had a beautiful experience with those guys. Tradeify, I've had a beautiful experience with those guys. My few experiences in this prop world have been very nice and very easy and by the book and no craziness. I don't get any special favors. I'm in the same roles you guys are. Yeah, they have Discords for advertising, for funneling people in the sales. If the owner of the prop firm is sitting there like, please guys, buy my stock, or please guys, take my call. Hey, everybody long this, whatever, be a little skeptical of that. They don't let you take your money until you pay them. It's all about the game and how you play it. So, it's up to you to decide what you think about the situation. But to answer the question, I haven't received the broker statements. And what Pat and I were chit-chatting about, like, analyzing this, is like, does this look suspicious to you? I'm like, it absolutely does. I mean, I've been, and it's funny that, Pat will straight up admit it, We all remember, I trust me, I know more about Pat than you guys do because I've been around the game longer. But he went through, similar stuff. You guys might have forgotten that. But he's honest about it. Once he got caught, he kind of straightened up and then got his shit together and started doing a little bit better, right? And then started doing really well at trading. It's like, he told me, he's like, you remember, I know all the tricks because I used to do them. And I'm like, I know, I was there. But he's like, but then I realized I was being an idiot and I need to be honest with people. And I was like, yeah. And he's like, that's all. And then he said, and this is kind of interesting. And he said, all I want is Danny to be honest. And when you think about it, it's like underneath the showmanship is a really honest person looking out for the trading industry, which you got to respect. He's like, I just want Danny to stop being a goofball and do the right thing. And that's what Pat actually said. So if you think about minus like the showmanship of it, he literally just said, he needs to do the right thing. He has responsibility and do the right thing. There's a side of Pat you guys don't know. He actually is a logical person that's really, besides doing the shit for ratings, he really is like, if he just did the right thing, I'd leave him alone. So that's the whole point. Listen, don't say you can't trust him either. You can't fucking trust anybody. This is trading. Don't trust me. Don't trust anybody. Look, my job is to take your money from your pocket and put it in mine in Wall Street. We're all trading together out there. My job is to beat all of you at this game. Everyone at this game. Okay. Don't trust anybody. Jesus Christ. Don't even trust me. Now, you know, like I have business interest here. You know, I sell you guys a product. I mean, to be honest, just don't, I teach you to be in this for yourself. I'm not saying guys follow me, trust me. Don't even trust me. Don't trust anyone on the internet. Yeah, don't trust anyone. Assume the worst. But, you know, again, I teach you to have good judgment. And that's the whole point of like what we teach you guys. You know, that's why my courses aren't like, just trust me, bro, do this. I spend an hour of time explaining to you why something works. And then I show you what it does so that you see that, okay, this guy's at least telling me there's a reason for this. And there's a fair bit of logic, you know, that you can utilize and say, well, he's not lying. And that's why it's like you got to see it for your own eyes kind of thing. And I teach you to see stuff for your own eyes. Here's something I'll teach you, right? So liquidity pockets, right? High volume, hedge pressure, high volume, open and close, high volume. Anytime you pass through hedge pressure, there's high volume. Why? Well, because it's the highest volume flow. That's what we're actually calculating. So the goal is that you want to be able to find volume while you trade. And I tell you, our calculations find volume. And that's the whole point of what we do at Rocket Scooter, is to find volume. Now, we're not really near any pivots, but let's see what Nvidia is doing. So I spent a lot of time like demonstrating, you know, this is how it finds volume, so that you guys can see that kind of stuff. And then I tell you, you know, this is what it does. And then I basically draw on my screen. The algorithm draws on my screen for me, and then I draw it on the screen, and then I follow the trade plan, and I do nothing else. So that way you guys can see, right? But anywho, yeah, I mean, in the industry, everybody does different things. Like I enjoy Pat because his stuff is funny and he's a very high production value. I like people that put a lot of effort in their stuff. Like he put a lot of effort into building his new show out. And it's kind of cool, right? To see someone go to that effort to make an entertaining show. And then all the other big guys that, you know, he brings on there. I'm friends with everybody, you know, that he brings on there. So it's like, there's a circle of influencer trader people out there that all are kind of cool behind the scenes. They all just kind of, you know, like him and Max were like pretending to have beef. You know, these people are just doing it to like have fun with it. They're all really nice people when you reel down and see them. Like I know Max really well. I know Pat very well. Like everyone's just on the behind the scenes. This is what it's really like. Let me tell you what it's really like from my point of view. As long as you're not an outright dirtbag lying to people, you're generally accepted by the community. Now it's trading. Everybody is like hustling and somewhat shady in their own regards. Like everybody will be somewhat shady. This is trading, okay? You're not going to have a fucking 4.0 from Columbia sitting here with their, you know, they got a law degree. Now they're a trader and they're this by the book. Like this is Wall Street. You get fucking shady guys with a toothpick out of their mouth, flipping a nickel in the corner with their leg against the wall, their gold tooth sparkling. It's like, hey kid, come over here, with a hat with a fucking feather in it. That's what this world is like. These weird kind of people, just street hustlers, dude. If they weren't fucking slinging stocks, they'd be slinging crack rock on the fucking street corner. That's what this world is like. Degenerate fucking gamblers. And it's not, like, I'm gonna tell you, if you were to walk into the stock market pits in like the 90s, this is probably the dirtiest, nastiest, smelliest fucking garbage smelling dump you ever would see, with these people yelling and screaming at each other. Absolute cesspool of fucking human waste is what we are as traders. Don't trust a goddamn person, period. These are people that will literally like rip the shirt off their mom's back and hawk it for the extra 10 bucks, you know, to go out there and buy more stock when it's tanking. Okay. Does your tool work on NinjaTrader? It actually works on its own platform. So we don't have any connection with NinjaTrader, but the Rocket Scooter platform itself is cloud-based, and you can deploy it from any computer that has a browser or from a phone, and you can utilize it that way. So fortunately, NinjaTrader is not powerful enough to house our tools. And we have to actually build a whole server process to do the calculation, which I had to make a platform out of it. What trade did I take today? I took the liquidity pocket, bear zone, bull zone trade, medium-sized position. I mean, small-sized position on yes. So, but yeah, no, I honestly, like in the community of like teachers and educators and streamers, you're generally accepted as he's an okay guy or she's an okay girl, as long as you're not like deliberately like defrauding people or being really, really stupid. You know, that's typically frowned upon because people don't want to see the boat rocked for anybody else. Like if like we all wish, we're not like hyper competitive, let's destroy each other. We're all like, hey, I support your business, whatever. The general mentality is actually support, despite the theatrics outside of it. Everyone's kind of cool with each other. Nobody likes to rock the boat with each other. Nobody goes out of their way to actually pick on somebody that doesn't deserve it. If somebody's going after someone, they think they deserve it. Generally speaking, I don't live in this world like if like I had a target on my back. Oh, like my competitor is going to go after me. I don't feel that way. People don't do that because they know trade results are what speak in this world. And nobody really, you guys watch what I do. That's why people don't talk shit about me, because I can just say, I don't care what people say, watch me trade. And the more audience you bring to someone that's doing well by talking shit about them, all you do is make them grow. And that is kind of the rule of thumb. You are immune to criticism if you do this. It doesn't matter. If you do this, nobody attacks you. Because if they do, then their viewers become your viewers. And that's the general rule of thumb. Let me talk about how to play the game in this world. If I talk shit about anybody that's a decent trader, you guys will go watch them, because you go over there to watch the dumpster fire and find out they're actually doing well. I might have just given them new fans, right? So people don't go after each other if they're doing the right thing for that particular reason, but also because it's respected. We all respect each other when they do well, and people don't like to see that. But people will really kind of call each other out if they feel like they have good reason, and it's not staged for like views or whatever. And I'm not the kind of person that likes to do that. I don't like to call people out. I like to inform my friends and kind of keep it, you know, quiet. Like, you know, hey, look, this is what's happening. What do you think? What do you think? And, you know, I don't start a conspiracy or anything like that. I don't try to get views. But people usually come to me because I'm very, very honest about like reviewing something. I have no side. I don't take any sides. I'm a lone wolf in this world. And I will look at the broker statement and tell you if I think it's real. I'll look at the 9s and tell you if I think they're 6s. Like, that's what I'll do. I'll be like your forensic scientist. So... am I copy trading now? I'm trading them individually, as you can see. Where did I enter and exit? Yeah, sure. I take this trade every single time. You have to come to the boot camp, you guys. You have to learn why I do what I do. You won't ever have to ask again. I take this trade every single time. I find liquidity and I long it. This is called a liquidity pocket. I tweeted last night, my 85% win rate is I find liquidity and I long it. I take the stab and I long it. I take the stab and I long it. So liquidity pocket, bear zone, bull zone is what we call every single time trade. I long it every single time, no matter what. And then I can take the further trade on the bull zone break and go, but I have no incentive to chase this anywhere today. I made my $5,000, $4,500 or whatever, and I'm cool with that. Days like this are very hard to predict because we have Nvidia earnings coming up. So I'm not going to go out there and be a freaking schmuck. I'm trading my Tradeify accounts. These are my funded Tradeifys. So this is money, real money. And trading my ETF as well. Yeah, so you gotta be very careful today. Yeah, VIX is in decay. I like this. I do like this. I like to see this VIX decaying like this. Yeah, not shorting the market. DD ratio is, listen guys, here's one of the setups that I do have. DD ratio is less than half. The top of the DD band is a particular short setup. I might actually do this since you guys don't believe I ever short the market. I might actually give it a shot. What do y'all think? What do you guys think? Should I take the DD band short? This is a setup. But yeah, so as it stands, to get off that topic from earlier, I haven't seen the broker statements. I haven't had a chance to judge them. I've only seen that one thing, that one photo and that one video he put out. And, you know, your job with the prop firm is to not give a shit about the drama that goes with it. You can look at it and see like, okay, is this person going to scam me? That's your thought. If this person scammed, I'm not saying he did or didn't. I'm saying if this person scammed people, are they going to scam me? That's all you care about. As a lone wolf, you go in there and you go, you know what? I want to take their money. You could be so angry at them you want to take their money. That's the way I think about it. It's a casino. There's stated rules. If they cheat you at that casino, you can sue them for millions of dollars. You know, like there's so many ways that you can fight the fight. But my thought is, are they going to pay me? Am I going to be able to take their money before they take my money? That's all I care about. And it's another game in town. As I go through and get my live accounts at each one of these firms, I'm going to run out of firms to trade. It's like, you know, I love escape rooms. I go to them all the time. But once you hit up all these escape rooms in your city, you got to start moving to other cities to find one. I don't know if you guys realize this. I mean, the fact that I'm a huge freaking nerd should probably clue you to this. I've been to like 60 escape rooms. I do them all the time. People take me there for my birthday. I love puzzles. I love games. I mean, that's what I do with the trading. Lock me up in an escape room, man. I'm a huge fan of it. But I've pretty much done them all in my city. So I got to travel now to see them, right? So with that being said, I'm going to hit up all these prop firms, and I got to do all of them. So at some point, I'm going to have to do Funded Family. And I'm going to say is I'll be the guinea pig with that. I'll see if I get paid. I'll get a payout, and I'll refuse to do an affiliate with them. That way you guys know I'm not being purchased or bought or anything like that. I won't get paid to do anything with them. At least for now, while the conflict of interest sits there, I'm just going to do it just to see if they pay. And see what the experience is like. VR escape room. I've never done a VR escape room, though. The whole point of an escape room is to, like, go to the room and play at the real puzzles. Like, I mean, I've done, like, millions of video game, like, puzzle games. You know, it's like Myst is like an escape room, you know? It's like the same kind of thing. But, like, I want to go to the place where, like, you have the real stuff, you know? Turn enough profit in your own account with all the extra rules. There you go. Never want to play their game. Don't like how many dumb rules they have. Yeah, I mean, it's to me, my job is to go in there and beat all the games at their own rules. Let's see if I can get a DD band short for close. I'm not against trying to take a DD band short with one contract. Now, I'll be a little bit risky here. On this particular, let me go here really quick. But DD ratio is less than half, so that is an applicable short from the band. The volatility is in decay, which is good. I do want to see this. I feel good about this. But there is an applicable short here. Maybe I'll tap it with some micros. And we'll do it on NQ. No. Yes. DD is getting slightly worse. Yep. So let's let it pop. Shoot over. They'll probably hit at the same time. The S&P has a less strong resilience, which is good. Let's find QQQ. Let's see if it hits a pocket anywhere soon, like an IP. Yeah, so QQQ has an EST right here, so this is good. QQQ has, you know, we know that the sandwich trade goes straight to there. So we'll let it ride another 40 points on Q, which will give us about 370 on the pop. Okay. So another 40 points. QQQ is going to go EST to there. We'll see if it interrupts, though. There's that selling pressure. Too early yet. I'm getting phone calls. Who is this? Welcome to the stream, guys. How was your experience? So I got my car washed yesterday while we're waiting for my trade to take off. You want to see for like, I always make a joke. Every time I do something, I'm always like, this is the time of year that I do it. I think one time I was like, I finally took a shower, guys. Like this is the time of year. Check it out. You guys, it's once a year. You're gonna see the beauty and all of her beautiness. Look how shiny my car can be sometimes. I go to I go get like, you know, $2,000 or whatever worth of. No, it's $1,300. I get $1,300 worth of like, you know, oil change and fluids replaced. You know, they don't tell you this, but your tires are $1,000 a piece. Your oil change is $1,000. Look how beautiful and shiny my car is now. It's pretty. It's clean. Oil changes for this kind of car are very expensive. Yeah. That's she my beauty. All right, let's overshoot to 70. Don't let it overshoot. Should I build one right here? That is the level. Overshoot to 70. Let's go. Let's just pop it with one for fun, for funsies. Just one for funsies. I'm a little early on this, but I'm going to build one and then we'll go to 70 for the second. Just for funs. A little overshoot there. This to fill the liquidity pocket at 19. This is roughly 20 more points from here, maybe 70, 75. And then we'll play it. So we're playing this DD band trade. DD ratio less than half. I hate shorting though. It's my least favorite thing to do. It's good it's accumulating right here. Might want one little extra pop. But yeah, this DD less than half is always a short setup. Off of the band. So as it goes to probably 70 and pops back in, that's the trade I want to see. Just got one here at the level. When did hell freeze over? Ah, DD less than half, baby. Baby. DD less than half, baby. Ooh, ooh. So here. Probably about, I would say, close to... So the LP is liquidity. I find liquidity now long at every single time I usually do. So the problem is I have two competing things. There is a short setup off of DD band when DD is less than half. I do have that setup. Let me show it to you guys. Don't forget to hit that like button, y'all. Yeah. Now it's a risky shot because there's also liquidity here. So it might actually take one more leg up. And it might actually squeeze me, so this is rare. But I do like that. I just want to demonstrate the trade with a small position with you guys. This one right here. When it's less than half, I can short it relatively hard from here. Again, 80 was the level I'm looking to see that overshoots to. And that's it. I got one. Get that confirmation. I don't like to keep shorting if it keeps going higher. I'm letting it go through, pop, and come back in, then I'll take my trade. I just got one to sit on. About 80 is that level. It is trying to build, which is good. It's good to see that. So there is a setup here. Always from there. But there's also liquidity pocket here. So we're going to have to finish that move. And I think that's the top. We'll see. Just with one NQ. Just one. Boys, that bear market's coming back. Let's see. Matt's shorting. Is hell frozen over? The views are going up because Matt's shorting. That's always what happens. Views go up and match shorts. Okay, where are we shorting to? Let's figure this out. Shorts are quick. Let's find it. I'm not betting on reversal. I'm not betting on sell-off. Nvidia earnings coming up. I'm betting on too much. Well, let's see if we can't find anything here to play with. What is this price level here? Where's that coming from? Oh, that's an old yellow line. Okay. Ooh, 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 to hedge pressure. Hedge pressure. Bow, bow. Why don't you call my name? Bow, bow. Hedge pressure. You like Peter Gabriel? And I'm out. Hedge pressure. Bow, bow. I am like Marshall, aren't I? All right, somebody do the math. Hold on. That's it. Shorts are short-lived. Just take the scalp and go. Bam, bam. Okay, we're gonna do the drawing. $7,000. $7,000. Oh, my ETF I made like $1,200 too. I keep forgetting to show you guys that. I made $1,200 ETF, but what was it? Shit, I already deleted it. 1684 plus an 1872 plus 1064 plus 1392. Wait. Plus. How'd I get exactly the same? Oh, it's so crazy. I am not copy trading these, by the way. That is so coincidental that I pushed the button. It coincidentally made the same exact in 2 accounts. They're not linked together, so that's neat that they're exactly to the penny. It means I got the same number of ticks with the same commission, everything. So I literally go through and I do close, 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 close. So that's just a product of randomness, but that's really neat to see. 70, 76, and that's a total of 8 minutes worth of work. When you add up 2 of those trades together. Well, actually, no, that was like maybe 12 minutes. Hedge pressure. 19, let's see, 920. Actually, I shorted right about here. Okay. Y'all ready to do the giveaway? It's all it is. A short is just a scalp. Guys, why did I close where I closed? Let's see how much you know about me. I don't care if I get the reversal right. Why did I close where I closed? Let's test you from the boot camp. From the boot camp. Why did I take the short? Why did I close super quick? Why when the market finally turned around from here? Now again, it could keep falling. I don't care. But why did I just take a short scalping away? I hate shorting, by the way. Why did I close right there? Ah, Master Rich. Yeah, liquidity pocket. I always short the next resistance and happen to be right there. I could still be making more money. It's not my job to get it right. But boy, oh boy, that short trade is awesome. Matt only shorts when it's right to short. 39 DD. Our shit is so good and clean. Sign up for the 20 days today. Don't be mean. This, I draw it, then I do it. I draw it, then I do it. I draw it, then I do it. How would you like to draw it and then do it? That's the whole point of trading. You can't plan a trade. You can't trade to pay your bills. Was the RN on that short? 1-to-1. And it cheated me early, fell a liquidity pocket. And then I had to get out a little quicker. For a full 1-to-1, I could have brute force held it through the liquidity pocket. I don't like to do that. I like to short to next resistance only. And unfortunately, the only resistance I had was I was expecting it to overshoot to the full amount. So as you guys remember, I said I'm going to short right here. I'm going to short again at what number did I say? Like 88, something like that, or 80. I was going to short and then trade it back down to next resistance, which was there. I was expecting that trade. However, it didn't make it to my next entry point and just fell right to there and I closed out, which is what I'm supposed to do. 380, right? Yeah. So again, as I can tell you, who's shorting right now? Who shorted DDBand? Like I said, you guys learned this. I didn't tell you to do anything. I'm not giving you trading advice. That's free YouTube. Who here shorted at upper DD band? Bros. Go post a picture of your trade if you made one on my tweet. Can you guys go to my Twitter to the tweet I just made? Hold on, I'm gonna make a tweet right now. Hold on. I'm gonna say Helmets froze over because Matt was shorting. Hold on. I'm gonna tweet. You guys, if y'all made some gains, go on Twitter. Go throw them up. I want to see them. Go post them in the P&L in Discord. Should I remake with AI Sledgehammer by Peter Gabriel and then say hedge pressure? So, by the way, remember, a short is not to reverse the market. A short is just a temporary lapse of liquidity that I exploit very rapidly. That's it. The short trade is over. I would be doing anything else. If I was short, I would have fucking closed out 2 minutes ago. Getting those 3 or 4 large candles like that to get a quick 80, 90 points in NASDAQ. Oh my God. This must be you guys covering your shorts. Are y'all moving the market? I'm not even telling you what to do. You guys did it all yourself. Who here did this because you knew what you're supposed to do from the boot camp? That's my question. Like, you learned how to find illiquidity and short it at the top, or find liquidity and long it at the bottom. You do it all the time. We all did. I love you guys. KJ. Awesome. Y'all are awesome. Bam, bam. Hedge pressure. Bam, bam. Why don't you short this a trade? Bam, bam. DD band. Diddy band. Who shorted at the Diddy band? Pause. Where's IDOC and why is she not late? Why is she not late here today? Oh, there she is. There she is. Hey, IDOC, I shorted today. How cold is it Chicago? Because Earth and hell must have frozen over. I shorted the market today. What do you think about that? I shorted. She didn't even trade. She's learning. I'm teaching her trading. But I shorted today. Honey, I did it. 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 I shorted. Are you proud of me, mama? Yeah, a lot of Gamma is a lot of market noise. Yeah, so illiquidity pockets are good shorts to take. I actually do this because liquidity pockets are good shorts to take, and also illiquidity pockets create major volatility or create bigger moves because of the possible volatility. And IP is here. This is a lesson on illiquidity pockets and liquidity pockets. LPs are long setups to there, and the DD band is always a good short when the DD ratio is less than half. This is one of our best shorts, right? You guys remember from the classes. This is one of Matt's favorite short setups to take. When I tell you the market is going to hand you shorts every once in a while, remember I told you in class, I said my first job as a trader is to locate liquidity and then long it. That's all I'm going to do. But I said, oh wait, that's not the one. What I told you guys, when it's time to short the market, it's going to be so fucking obvious and easy. You're going to have an easy time doing it. Did I say that? Did I tell you guys that, right? When I told you guys, when it's time to short the market, you'll have an easy time doing it. It won't be a guess. The market will, when it starts turning into a bear market, it'll start handing you some easy shorts to see. It's not going to be like, yeah, I missed the last 3 days, whatever. It doesn't matter. Look, it's $7,000 just on an easy setup. Easy setup, textbook thing. The market will be very obvious when it's time to short. Don't worry about trying to be the first. Let me tell you a good trick that I learned as a trader, and I've learned this years ago. I will always be the first bull to a bull party. I will always be the first person bullish. Always. And even every market, I'm taking long stabs. So I will never be late to a bull party. But I will always be a day late to a bear party and no more. I will always be a day late to a bear party. This is a powerful message to send to you as traders. There is nothing cool about being the first person at a lame party. You're a fucking loser if you show up. I brought cookies. Wait, where is everybody? I'm 30 minutes early. Do you show up to the club at 8 o'clock and get bottle service? The girls come out waving the things and you're all by yourself like, yeah, the DJ ain't even here, but I don't even care. Let's go. It's not, none of us do that. You are a loser if you're early to a loser party. The bear party, no offense, is the loser party because the bears are always losing. The bulls are always winning. So don't be the first person at the party, especially if it's a loser party. Being first person at a cool party is still lame. Being a first person at a loser party is beyond lame. It's cringe, right? So don't be the first person to a bear party. You're not Michael Berry. They're not going to make a movie about you. You didn't big short this for $1 billion. Don't be the first person at the bear party. Bears are the kind of people that call the cops on their own party because the music's slow. Yeah, look, can you come turn on the music downstairs? It's a little loud and I'm trying to sleep. Sir, this is your own house. I'm scared. Can you go tell them to be quiet? Bears are lame, dude. Lame party. Be right back. She's got work to do. We know she's gone. Yeah, so anyways, joke aside, don't be the first person to a bear party. As a bull, I will always never miss a bull party. Don't ever miss a bull party because it's mostly a bull party. But be one day late to a bear party. Trust me when I say when the market finally flips bearish, the market will literally hand you easy to see bear setups that follow literally textbook level setups. Bear setups are so easy to find. They're just so rare. They don't happen all the time. And I get in and I get out. And let me ask you a question if you're just learning from me. Yeah, let me show you. Yes. When I get out, what makes me close a short setup? Okay, so I find liquidity and I long it. So I shorted illiquidity and I cover my short when I find what? Short again? No, dude, no. Don't learn anything from me. Never take a trade twice unless it's a bull trade. A short is a one and done. If you were too scared to do it, don't listen. Okay, sorry. I can give you investment advice. Don't listen to a random guy on the internet. If you're too scared to make the trade on the short side, a short is a one-time thing. Don't say support. Don't say resistance. Those are correct answers. But why am I covering on a fundamental sense? I'm shorting when there's illiquidity, and I'm covering because there's what? Because there's what? It's the opposite of why I'd buy. Or it's the same as why I'd buy. Liquidity. If I'm shorting because there's illiquidity, then I'm covering because there's liquidity. Beers. Every time I say liquidity, it's making me thirsty. I kind of do want a beer. But yeah, so I shorted here originally if it was to fall to find liquidity, which is always at the bull zone bottom. Always. Because it was overshooting, I allowed myself to take a second trade from here to add in at the top of a liquidity pocket to cover right there to turn it to a 1-to-1. My one contract was a 2-to-1 trade, but then when I was going to double down, it's a 1-to-1. It doesn't mean it can't do this twice, but just remember, short trades are so short-lived. I take the first trade and that's it. That's all I do is the very, very, very first trade. I don't bet that the market sustains shorting over and over again off resistance. Liquidity is almost a every time sort of thing. Liquidity every single time. The shorting is a one and done. Get in, get out, and close, and never do it for the rest of the day. One time. When it's time to short the market, it will be so obvious you won't miss it. You will not miss it. I told you guys that in the classes. Y'all learning from me, right? Okay, let's do the giveaway. Who wants to play Call of Duty today? Because I'm kind of bored. Y'all, go to the game channel and put up your Steam IDs. Let's squad up. I'm going to play some Black Ops. I want to have some announcements for you guys to the platform. You guys are going to love this. Shorting is so easy to see when it's the right time. Don't be... Don't be the first bear at a lame party. You are the lame one. You are the one that doesn't make money. You're the person that goes, trust me, guys. Trust me, guys. Trust me, guys. Trust me, guys. Look at this, guys. We made money. Look at that. We were right. You'd rather be this guy. Oh, yeah. I'm winning. I'm winning again. Oh, I took it. Oh, I'm winning. I'm winning. Made it back. Up, winning, up, winning, up, winning. Damn, I lost. Damn, I lost. Damn, I lost. Okay. All right, now I'll take a bear. Oh, I'm winning. All right, that's me. That's me. That's literally 22 days up. Actually, I think I have 1 losing day on the way up, like 3 losing ways on the way down, and now I'm winning. I'm going to tell you, when it's time to be bearish, the market will give you bear trades, and they are easy to spot. They're not hard to spot. Bear trades are almost as easy to find as bull trades. They're just very, very, very infrequent. But when it's time to bear the market, I'm always the second bear to the bear party. Because who wants to be lame and be the first? What's the triple B? The contango midpoint is right here. And so triple B is a function of contango in the VIX. It is 1631. Let me type it for you. Don't see those red days, you know, a couple of days ago, red day, and say, holy crap, I'm missing out on shorts. I didn't. I made $7,000. 4 of it was here, 3 of it was there. That's it. And like, I'm a day trading kind of, you know, expert, I guess I'd say in a way, maybe expert. I'm definitely proficient at day trading. I know where to find liquidity and I buy it, and I know where to find illiquidity and I short it only under the conditions of bear market or bearish conditions. DD band is a short when the ratio is less than half, and it's always a scalp because we don't short bull runs that quickly. I always err to the side that this is probably going to break out and run, okay? So I take the quickie scalp off of the DD because this almost always is a scalp. And if you guys are like, oh, I can't wait to make that trade, you missed it for the quarter. It's going to be very rare that we get this trade lined up again. It's like a wait for it and do it. That's why I say you got to take the class and be armed and ready. Hitting upper DD band with DD less than half the first time it all lines up is always the best trade. You may not get this trade again for a very long time. Good that you shorted for 3 dump days. No, I didn't short at all. I took little losses on the long side. And I've made it all back. Like, that's the whole point. So, you know, it's not like the goal is to chase the trend. The goal is to be right more than you're wrong. And this was an easy trade to take, and this is an easy trade to take because they were both scripted on the text. I mean, on the scripted, written on my handouts. Like, that's a normal trade I will always take every time. I love it under this condition. This is a proper short setup. Everything aligned. And like I said, and what do I tell you guys when I take a short? What do I need to convince me to take a short? Tell me, guys. When I take a short, what do I need to convince me to take that short? There's a series of words I gave you. Full confluence. When everything has aligned. Thank you, Cease. You nailed it. We nailed it, right? So everything has to line up. And that's it. And it's a quick trade. It was so quick, it wasn't hard to think about. I need full confluence. Not all, well, all three is bearish for me to be bearish, but to take a short trade, I need full confluence in the short, which means every single short setup has a rule that goes with it. I need absolute confluence. Okay. So I need DD less than half to short off a green. I need DD less than half to short off a bear zone. And I need MRES less than 0 to short off of orange when I bump it from below. When you break through orange from the top, I trade it no matter what. It's an EST as well. I'll take a market crash short every day. So right now, the question is, this is good for that. This is good for that. It still is. But this trade, everyone already took. DD less than half, bear zone top was a short. Everybody already took it, I think. So you have everything kind of lining up right here. You have this rule to next resistance. You have this rule to next resistance, and it's all lining up, right? And I tell you, when it's time to short, the market will literally hand you shorts on a silver platter and say, please take my free money. It's not hard to see this. And the market is having a hard time finding a bid here. But if I wasn't already making this trade, I wouldn't be risking it again. Now, again, a commit the trade is okay, but it's probably a loss because it already went off. Will it happen a second time? Sure, it can happen 2 times. But when it comes to shorts, I try to be the second in. I'll try to be the first person in a bear market. Just kidding. I try to be first in all my trades. So I try to get in and get out quick when everyone else is like, ooh, let me short this. Right now, people are like, is it too late to short? When you're day trading and you have to ask that question, you've missed the trade. You always miss the trade. Learn to be first, and then you make the money. You make the money when you're first. You make the money when you're cheating. We don't cheat, so that's the only other logical alternative is to be first. I wouldn't be shorting this, period. The market is pressing liquidity right now, and DD ratio is going up. DD ratio is trying to go to 47 and 48. It's pushing. So I wouldn't. That was a one and done trade. And that kind of trade might only come, you know, in this bear market, maybe 2 or 3 times once a month. If it goes down for a quarter, you might see this one line up once a month where everything lines up and is easy short. Super easy. $3,000 or $4,000. But we prep you in the classes to be ready for these things. So now I don't have to guess the direction. That's the funny part, right? I don't have to guess the direction of the market. I just find liquidity and I long it to the resistance. I find illiquidity and I short it to a support. How did I learn this profession? Books, YouTube, college, seminars? School of Hard Knocks. Gregory James, pretty much that. I carved out this strategy live on stream for the last 6 years, by the way. 9 years. Since 2016, I've been streaming. And we've been building this platform and the ideas behind this platform ever since. I started creating one exploit where I reverse engineered CME's span program to calculate ranges based on margin requirements. Enter this green line. This is actually based on CME margin requirements. It is a high volume pivot, predictable, and it never fails to provide high volume activity. As you're approaching it, you always see high volume spiking right near the edge of the band or at the band itself, which was here. There's the volume spike at the band, and it always provides resistance and support. Now, the market may steamroll through it a certain amount of times, but there's a probability that we have that we counted on the last backtest we did. Only 4% of days will close above, 8% of days will close below, and 88% of days will close in between these bands. The market contains itself and maintains structure the majority of the time. So basically, like I reverse engineered CME span. I came up with an idea that when I was researching how the market works. So I'm an engineer, by the way. If you guys are just tuning in, I'm a chemical engineer. I was, and I'm like a math nerd on the spectrum. So like a kind of like, can you show me your P&L, Matt? So I had this desire, when I lost my job in 2010 as an engineer at a chemical plant. I worked for Dow Chemical, right? Everybody knows who they are. And when the economy went to shit, they had to let go like half of our plant. And I was let go, given a severance package. I was the newest guy there, so I had no seniority. Clearly, I was like the first to get axed, even though I was really good at my job. Everyone there, the 6 engineers we had were all fantastic at their job. They were all really smart, probably all smarter than me, extremely talented engineers. And like, I was the new kid. So when they were like, we got to let 3 of you guys go, and it's seniority based, everyone knew I was the first to go because I'd only been there for a couple of years, and they had all been there for like 5 more years. So it was a hard thing. And then I was like, okay, well, I got interested in commodities trading or commodities prices when I worked as a catalytic engineer for this company. I was ordering heavy metal based catalysts, so I had to study metals markets, and I was fascinated by the randomness of the stock market, but how people applied so much logic to what they thought made sense, like patterns and stuff. They were like, Matt, we need you to help us forecast platinum prices, and I was like, how do I do that? They're like, well, I don't know, people, here's some books on stuff, and or here's some resources on stuff to like, figure out, because we need to order our catalysts at a price where metals markets dip. Can we find some trends? This is what I was challenged to do as a chemical engineer, to figure out, when platinum would be cheap. Like, can you make some sense of this? Like, we have this idea that now, in the early 2000s, data has become highly available, right? For people to find prices of stuff, and can we estimate when is a good time to put in our order for our catalyst? Like, can we save 10 or 20%? Because we have a 3-year window, we got to order this stuff within the next 3 years. Can we find a trend where we think that there is a dip in price and we can save 10 or 20%? Remember, an engineer's job is to save money for their company, to design stuff that makes money, or to save money on the stuff that works. So I was challenged to study metals markets. I became fascinated with it because it was like my assessment was like, the bosses were basically like, can you figure out if there's trends in this price action? And my first thought was like, so I studied everything I could about finding trends in the market, and I don't know if I understand this, but it all seems kind of random, and I don't think you can find a trend in the market. Like, I know there's people that use like analysis techniques and they measure charts, but I said I don't understand how. And my conversation with the higher ups was like, I don't understand how. None of them are traders, but they were like challenging me to figure out, can you guess the price of metals? And my answer was, I don't think you can do this. I don't think there is a sophisticated way from the materials I found to predict highs and lows in the markets. And there's no season when it's better. There seems to be like a very strong correlation to like global events and things, and import prices. There's like some correlations here and there, but to predict it seems to be a fool's errand. It was one of the conclusions I came to. Yes, there's trends. We can identify if it's a trend and it's trending down, but to guess like in the future if this is going to dip, I feel like we can't do it. But the challenge was like, can we do it? And, and everyone was like, yeah, it kind of seems, and I was like, and I feel like this market is random. It's just noise. It's like random buyers or sellers. And originally early on, I was like, but I started trying to say, well, let me see if I can use this trending stuff to see if it works. Like, and I was like learning about technical analysis and learning about moving averages and learning about Fibonacci's and like, maybe I can buy. And it was like my application to the little bit that I did was like, I don't think you can predict the market. And that's what I came to. But I was fascinated by people's journey in trying to do so. And then when I got laid off from the job, my career was like, they basically came to me and said, we're going to let you go or give you a severance package and move to another state. So here's basically what happened. I worked for a company called Roman Haas, which everybody knows is a fucking badass German chemical company. Roman Haas was fucking wildly profitable, even in the recession, because they're so good at what they did. And Dow bought us out because we were doing better than they were in their accolades business. They wanted our plant. And so Dow pulled out of the deal when the market went to shit, and then Roman Haas family sued them and forced the merger to go through. And it set a huge precedent in contract law, which is really neat, was that the Dow was going to make this money building some plant, I think in Oman. It was going to make like $8 billion on the deal. And the other side pulled out of the deal, and Dow didn't have the money to go through with the merger. And the merger was already a signed deal. And Dow tried to sue their way out of merging and saying, well, force majeure is an act of God. Prevents me from fulfilling my obligations, right? Force majeure is a great, it's a great defense in many contract disputes because you can't control, and sometimes there's leniencies for force majeure or whatever. Like, sorry, we can't go through with the merger because of an act of God. The stock market crashed and we can't afford to pay the bills. And this is a precedent set in contract law. This lawsuit was very famous. We were wrapped up in the middle of it. And they basically said, the Haas family was like a privately owned, the privately owned company, and they always take care of their employees. I love German companies. If you work for a German company, you guys will be blessed. I'm telling you, they are fantastic. And in the contract, they basically had all these things written. Like, if you lay off any of our people after the merger, you owe them half a month or half a year or a year worth of salary based on seniority. So they even put in like golden parachutes for fucking the lowest level employee, just like me. I got half a year's salary when they let me go. And here's what the funny part was that the precedent was the judge basically declared that the stock market crashing and the global economy crashing is not an act of God. It's not a tornado. It's not a hurricane. He goes, he was like saying it's rather preposterous that you would claim that the stock market crashing is an act of God. It very much is an act of man. We are responsible for this, not the Almighty. And therefore, you must go through with the merger. Isn't that cool? What a cool case, right? We were all wrapped up in the middle of it because we were sitting there like, are we going to be Dow? Or are we going to still say Roman Haas? Which one are we going to be? And it pulled through that Roman Haas family forced the merger. Or the Haas family did. So they did. And then, Roman Haas owns like Morton Salt. You guys know the Morton Salt with the girl with the umbrella, with the dog biting her jacket. And they own plexiglass. Everybody's car has plexiglass. They own those two major things. And they're also one of the large global suppliers of polyacrylic acid, which is the Huggies powder. So they do make a lot of really cool shit. Yeah. So long story short, they forced the merger to go through, and then I was canned very quickly. But it wasn't like we got to let you go. The boss came in and was like, so we have bad news and good news. I can't tell you, like, by the rules, I'm not allowed to tell you who's being let go. Okay, because the rules are, we have to be fair with this, but because I love you and I handpicked each one of you. This is my boss, the one that handed me Outliers to read, this fantastic boss I had. First day on the job, he goes, read this book. It's called Outliers from Malcolm Gladwell. It'll change your life. And it did. It changed everything about what I do with life, how I think about this world. Anyways, he was like, I can't tell you who's being let go, but I can tell you something. He's like, I'll get fired if I tell you who's getting let go, but I can tell you something that can help you understand this. It's based on seniority. So like he found a loophole to tell us. He's like, it's based on seniority, guys. And that's all we're going to say because it's so hard to make this decision. But Dow's lean model requires us to only have 3 engineers per this amount of plant, and we have 6, and well, it's seniority based. And everybody turned and looked at me, and I was just like, oh, damn it. This sucks. So, but they didn't tell you what was coming, right? When I go sit down, they called you in one at a time, but you knew what was happening. So you basically, like, he gave us that information, we get a head start on our transition. So anyways, I went and I sat in the meeting. The plant manager was there, and the HR people were there, and they were all our people, not the Dow people. And they were like, so we have an opportunity for you. Either A, we can relocate you to another Dow facility, which this one's in Midland, Michigan. And I was like, ooh, oh God. And they go, or you can take this. You can take this. Open it now. And it's like, we open it and it's like half a year's salary, And they're like, you can take this. Take this. And I'm like, so they were like really happy that we all had golden parachutes on the way out. Even me with like 2 years of experience. I got half a year's salary. And a check during the financial crisis. I had money to live on. And then that's a cool story, right? You live in Midland, Michigan. I live in Houston, Texas. I would die in one day in Midland, Michigan, man. I would literally, my fucking nuts would freeze to the bed and I would like die. I couldn't do it. I was like, we hate the cold so much, man. Like, seriously. Much better than a golden shower. Almost there. You're in Detroit. How do you guys do it, man? It's like it's like the fucking Russian tundra up there. It's like frozen solid. I would die. I would die. You think the Swiss companies are better than the German? Absolutely. Like a lot of these, a lot of the European companies, Switzerland, Germany, they really, really good at taking care of their employees. It's all about this. They have a cool business model. The Germans always had the best business model. It's hire as many smart people you can find and hire them all. If there's a tie, if you have a job and there's 2 equal candidates, you don't pick one, you create a second job. This is the German philosophy. It's amazing. Hire as many people as you can that are excellent at what they do. This is exactly what they do. They overstaff, and because of that, they crush it because you have so many talented people working together. It's fantastic how they run their companies. Dow is a traditional American company, whatever. Lean business, lower the bottom line, tons of red tape bullshit. German companies are like, there's 3 candidates and 1 job. Let's find something for the other 2 guys to do because I like them. It's exactly like this. So you work at S&P from Germany. It's really nice to see their engineering mind. It really is. They're like, we can't, because it's more like we can't let the competitors get this guy. That's how they feel. It's like very competitive, especially in like automotive and other industries. They don't want the good talent to go elsewhere because they know as soon as you lock into a company like that, you're usually there for life, and they want to keep the talent, and they want to keep talent there. And so when they let go of people, it's like these people built our company. It's honor we owe them. Let's give them a good severance. And I felt like, I was like, oh hell yeah. So I got like, $50-something thousand check. I'm ready to go to town. So then I had already had this experience in the market. I have a buddy of mine that was a day trader. Rest in peace. That's another story I don't want to get into. But he's the one that taught me. He was like, why don't you try day trading? It's kind of cool. And I started like looking into it. I've already had a little bit of experience with it. And I started trying to like, okay, let me try this. And it was just like out the door, there was just nothing to teach. Somebody asked like how I did my journey, right? There's nothing that was good at teaching. I thought the market, the stuff out there was weak to begin with, but I struggled with it for years because other people used it. And I thought it was going to get me somewhere. Trying to use technical analysis and moving averages and all the stuff that people normally do didn't serve me any purpose. It didn't help change the stats of what I did. And I went deep into technical analysis. I started like, one of the first things I wrote was when people were like, and this was a cool idea that I had. People were like, okay, when the moving averages cross over, that's when I buy. And this was like in 2008, or 2010. So this is what I did, was when the moving averages crossed over, you'd have a slow and a fast moving average. But we know how averages do. They pull on a sample size. And if the chart is like moving like this, and then starts to rally and starts moving like this, the averages crossed over really far away from the dip. And so my thought was to use calculus to try to get closer to here. What I did was I took the moving averages, okay, and I took the distance between them, and then I took the first derivative, okay, let's call it d distance over d time. And I looked at the rate at which they were closing in on each other. So I wrote a program. It was using discrete mathematics that would do discrete intervals by catching this data and then plotting the derivative. As soon as the thing was widening versus contracting, as soon as that rate started changing from increasing to decreasing, that inflection point is where I would enter the trade to go right here. It was a fantastic idea. I was like, these knuckleheads are trading on delay. Let me use a little calculus to get ahead of this. And I wrote a program that did this. And my second iteration of this program was even more sophisticated. I took a short-term moving or long-term moving averages, and then I took a medium term, and then I took a short term. And what I looked at was I took these 3 and I made it into like a box like this, where you had the long term, the short term, and the medium term was somewhere in this box. Treat this like this is a box with the medium in the middle. And I wanted to find out when the medium term, which was I considered to be the trend, the short term was the noise, the long term was not the trend of the day, but the trend of the longer term. So the medium is the trend of the day. Short term is the noise of the day. And so I was looking for the time where the medium, I could calculate how far in advance the median would touch the bottom of the long by using the same approach, but then forecasting and projecting how many minutes it would take to get there at the bottom of the box. The code didn't work again. I don't know. ETF is like dropped the ball a couple of times with this. Let me ask him. Or maybe I dropped the ball. Oh. Okay. Can I have those codes from... It was 2 contests ago. Was this one? And it's not that they dropped the ball. I'm giving them too much credit for this. I kind of did the contest late. I did ask him to give me the codes again. So technically speaking, it's my fault, but my bad. But they need to give you guys new codes. So what I did was I would project when the averages would cross over, and it was easy to do that by writing some math. So if the two things were like, if the long term was like this, and you know, the short term was like this, and the medium term was like this, I would use, you know, essentially I would use calculus, and I would basically like project. I would create regression lines as well to project not only where they would cross, but project when the rates would cross. So the rate is the distance between here. So I would take this distance, I would plot D as a distance. D would go up and D would come down. Distance can be 0, distance can be infinity. And I would have this distance too. D2 would go up and down. And when the distances were here and they were moving like this, I would forecast and try to use a little math to decide when that distance was inflecting, and therefore I can project when these things were closing in on each other before they actually crossed. So thank you. Technical analysis seemed like a fucking joke to me out the door, but when I tell you I worked on it to this degree. Is this pretty cool? Do you guys like this? So that's what I actually did, was let me try to forecast when the averages would cross over rather than wait for it to happen. When is this distance closing in on itself? And that's the time to look at the trade. And then I would look at when the market would dip very quickly while that distance was closing in. And I would notice that it usually would dip on high volume, and that volume started to decay as this was doing that and this was closing in. It turned into be a very viable strategy, at least for a little bit. But this was random, as I found. What was the viable strategy was finding the idea that when the market dipped when it shouldn't was an illiquid spot that caught liquidity, and that's where that volume came from. So as the years went by, I started figuring out that technical analysis was a complete scam. Matt's link, hold on. And that it really didn't do anything. It was like you're just plotting noise and trying to figure something out. But the idea of the principles I found was that, you know, liquidity and volume are kind of the ways to go. So I started researching other things. I started looking at the CME group because I started getting into futures, and I started researching the CME group. So I started trading futures, I think, in 2014 or 15. 2014 maybe. And I started researching the futures industry, and I found out that the futures runs on a giant computer. This market is run by a machine. It's not people yelling and screaming at each other. This is an algorithm that sets these prices. And so I was like, okay, the CME group created this thing called the Globex, and Globex follows these protocols and stuff on it. Oh, they patented it. That's great, because a patent is like public information that reveals how something works. And I read every patent that they ever put out, literally every patent. I spent years doing this over time. I read all of them. And I figured out that we're trading against a machine with rules. And the engineer in me was like, a machine with rules. That's kind of cool. A slot machine is a machine with rules. There are odds. There are reasons things happen. Now it's supposed to be rigged, but there are rules the way this thing works. Price spanning rules, velocity logic rules, gapping rules, IOP rules, all kind of stuff. Shutdown rules, right? You have circuit breaker rules, rules. And rules to me is the easiest thought I had, or the simplest thought with rules, is repeatable. Rules are repeatable. There's a rule, it happens every time. A rule is a rule, rules aren't broken. So, yeah, so when I said I don't take the second short, did you guys learn something about that too? The second short is for newbies. Don't short twice. If you didn't get the first one, you didn't have the balls to do it. The second one's going to beat you up. How do liquidity maps integrate with DD bands? They don't. They are independent. DD bands are an exploit of margin requirements. The liquidity maps are a visibility of the options landscape and the ETF. They go hand in hand for your pivots to line up. If they line up, it's a very beautiful setup because NASDAQ had resistance here based on this rule. This is a ratio of what stocks are doing. This has resistance based on futures rule. You had two pivots line up, which is why that short was so beautiful. Second short at NQHP, you stop that right now, Garrett. Don't. One step 50K. Okay, let me see if that works. Maybe people are doing the wrong one. Okay. Hey, so whoever was asking about ETF, Aramis, make sure you're doing 50K one step. If I'm an idiot because I'm an idiot. Oh. So as Jason is writing me, letting me know that I'm a fucking idiot. So there for 50K one step. And I don't remember what I said, but I'm very certain my ADHD brain probably told you 100K. So I'll send everybody messages and let them know. Sorry, guys. It's my bad. I'm kind of dumb sometimes. I cut and paste and I write the message and I probably told you the wrong one. He said they're product specific, so that's the problem. So use that for the one specific product. I think I might have confused it because I had two concepts at the same time. Jason always reminded me when I'm being an idiot. Ah, damn. I take back everything I said about ETF. Dropping the ball. They dropped the ball when they started working with me, that's for sure. I'm a knucklehead sometimes. All right. So my college stories remind you of when you were an undergrad engineer and A would be a 30 and B would be a 20 and C would be a 15. Bro, that's just like exactly what it was. Remember that midterm that the Titanic midterm where I told you I got a 40 on it, right? That was an A minus. I got a 40 because I aced the Titanic question. The essay, right? But the multiple choice is horrific. I think I got like, of the 20 questions, I probably might got 6 or 7 of them right. It was god awful how bad I did on that midterm. But yeah, some of the engineering class finals were, or the tests were like the curve was so super high. A 50 was an A, you know? Oh yeah. So anyways, to finish up the story, technical analysis to me just seemed like a scam, a huge scam. And even applying sophisticated or more sophisticated math, trust me, the stuff we do now is the sophistication is through the roof. But trying to use a little calculus to determine, you know, the rate at which something's closing in on itself, I thought was a genius idea. I was like, this is cool. I'm going to get one step ahead of these technical analyst knuckleheads, and they're going to probably buy after it moves. Let me see if I can buy when the market moves against what it's supposed to be doing, and let me find it. So I started figuring out that really, like, volume was actually really prime. Predicting price action, it didn't work. No matter what you could do, the market would just move away from the average you're doing. It was noise. And then I discovered another principle of moving averages, which is there's a polling inconsistency with the discreteness of candles. If you have a 10-period moving average, right? You have 10 candles, 6, 7, 8, 9, 10. This data point, and like the last plot that's plotting an average, right? This data point is use all 10 of these data points to calculate it. But this one, because it's a candle, is updating in real time. It's like up, down, up, down, up, down. So your moving average is anchored all over here because all of these points are anchored. But this little piece is like up, down, up, down, up, down. So like so if you had like another longer period moving average sitting there, Because this candle is moving up and down and moving up and down. This guy would break it, unbreak it, break it, unbreak it, break it, unbreak it. So if you wrote an algorithm that was trying to trade off of these crosses and you had it unlimited buy and sell and buy and sell, like if you had a program that said buy when they cross over, sell when they cross over the other way, you would notice that it would buy, sell, buy, sell, buy, sell, buy, sell, buy, sell with the noise of that one candle as averages would cross and uncross like this. And I was like, okay, that doesn't work. So let me write some time effectiveness to this. Like, okay, only buy once every 5 minutes. But it still didn't change the thing because sometimes every 5 minutes, the thing would like buy, sell, buy, sell, buy, sell, buy, sell. And then 5 minutes later, buy, sell, and 5 minutes later. And then some days it would work really well and then make money. But the noisiness of this made this a completely ineffective way to write an algorithm to trade. My goal was, I'm a computer programmer. I'm a mathematician. I'm going to automate this stuff. And that none of it ever worked. That didn't work. So a neat thing I discovered was that on a chart, if you look at the end of the day and two moving averages crossed over here, this is something I want you guys to understand. This is an incredible realization to how wrong people are. If I look at a chart that does this, at the end of the day, from the perspective of, okay, the day is closed, let me look back in time. I could have bought here and made that money. But I'm going to tell you something, is that when you experience this from the point of view of going in time, not from the end of time, the same chart, the moving averages would have not crossed here. It would have crossed here. Further out in time. Sometimes. The after the fact of that look, I'm going to explain it to you. If you have two moving averages that are right about to cross over, okay? And then you lock into that data point here, and then you move to the new candle. So this candle is frozen. Now you're in a new candle, okay? This is interesting. The slower average just moves right here. And the faster average, you have basically two little things on a hinge. Consider this a hinge. These are all locked in place. These are both mobile. So as this candle moves up, the hinge swings up this way. And it can look like that. If the candle moves up a whole lot, this hinge goes a whole lot and it goes up. And if the candle goes to infinity, it goes straight up to zero, like zero slope. So the interesting thing is that as this candle moves up and down, you can literally watch this happen, is that this faster one moves like this, and then it moves like this, and then it moves like this, and then it moves like this. It crosses, uncrosses, crosses, uncrosses. But if you zoom into this, you're going to see an effect that happens in every technical analysis-based algorithm. Okay, this delays your response by the pulling period of the candle. If it's a 5-minute candle, your signal will come at best 5 minutes late. So here, if the candle starts moving up, it crosses here. If the candle is here and the candle gets bigger, then the fast moving averages moves up even faster. So for the same slope, it moves up and up and up and up. So the bigger that candle is, the further back in time that cross happens. If you are right here, right now in time, as you're waiting for them to cross and that candle moves, the cross moves back in time because it hinges this way against the flat line. And you're like, oh shit, it crossed a minute ago, 5 minutes ago. If it's a 10-minute candle, it'll cross 10 minutes ago. At best, the bigger the candle is, your cross already takes, you're like, wait, when did it cross? It's now crossing near the other candle. I didn't see that happen. And your algorithm is only going to look at the back test of exactly this moment in time, and then it's going to long where that cross happens at the next candle, because that's how discrete math works of a candle. An algorithm is not going to trade in between the candles. When you write like a Ninja Trader, long at candle start, the cross happens here, it'll long at the start of the candle here. But the cross on paper might be close to here. So when you're making an algorithm, wherever it actually looks like it happened on a big run, in real time, it actually happened X amount of minutes later. That's why you can't make a technical analysis based algorithm that matches real performance. Does everyone understand that hinging thing, what I'm saying? As long as the candle goes really high, the cross moves back in time. So then you're looking at it, you're like, wait, it looks like it crossed earlier on the last candle. And if you have a big green candle, the cross was like 5 minutes ago. And you're like, wait, it should be crossing now. It's because you have space in between it and you have a moving candle in a fixed spot with nothing in the middle. So these little lines are crossing over. So your algorithm is never going to match real-time performance. And that's the thing that taught me that you can't write an algorithm with bullshit technical analysis. And at that point, I was absolutely determined that moving averages and shapes and Elliott waves and harmonics, Jesus Christ, is a scam on top of scam. The shapes and patterns and stuff of the market you cannot use that stuff to forecast price behavior. And there's still people to this day, like 30 years later, 40 years later, selling the same systems invented by these quacks in the 70s to still try to make money off of it. If you've never made money with your technical indicators on the chart, it's because trading is not about trying to predict the price action. I said today it was a bear market. It looks bearish, but it doesn't matter to me. I longed here and I shorted there and I made money. So the goal is to identify things that matter. And I took my journey to trying to figure out what does matter. What I found is that volume is really easy to predict. My first thing I tried to calculate and figure out was when I was reading the CME Group patents, I found out that they set margin requirements based on a program called SPAN. And what SPAN does is it looks for the distribution of liquidity and reportable futures positions on these big entities, like big firms that report I'm long and short NASDAQ. As an easy to understand example, this isn't how it is, but let me explain it that's easy to understand. If everybody was like, I'm long NASDAQ here, this is one firm, another firm, another firm, another firm, and everybody's like, I'm long here, 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 and here, and here, and that's it. There's other people that are like, well, I'm short here, here. Let me do it in red, it's easy to understand. I'm short here, 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 and here, and that's it. All the reportable positions are spread like this. You've told them where the liquidity is. The sellers are here, right? And the buyers are here. And because you told them, if anybody's going to buy, it goes to the seller. If anybody's going to sell, it goes to the buyer. And if they're already there, then your expected range is the distance between these two. So what they do is that if that distance gets bigger, they would make the margin requirements slightly bigger to put less pressure on the boundaries to make the contract more expensive to trade. If the market was more liquid, i.e., these people were closer together and they were here and here, then the margin requirements would go down to make it more plentiful to trade. As liquidity went up, they would try to attract buyers of the contract. If liquidity went down, they would try to prevent people from buying the contract, make it more expensive to trade, fewer pressure on the market. To keep the market in check, it makes a lot of sense. If it's liquid, let's lower the price as much as we can because we make money on every trade that happens. If you have $10,000 and you can buy one contract because it's 10,000 commission, we made one commission. But if we make it half as expensive, we made 2 commissions for the same amount of money you put in. So they're trying to make it as low as they can to bring in as much commission as they can per dollar without making it too cheap to buy the contract when there's no period of liquidity. Imagine if you could buy 100 contracts for your 10,000 versus one because it was infinitely cheap and you dump those 100 contracts. You're putting pressure of 100 contracts on an illiquid market. You have more ability to crash the market. If they make it too cheap when the volatility is potentially high or the liquidity is low, then a lot of contracts can crash the market. So when the liquidity is high and you can buffer that movement, they make the contract as cheap as they can. SPAN runs 16 scenarios, right? How long did it take to figure all this out? I started doing the work on SPAN in 2015 and 2016. And I found out that what they do is those scenarios are looking for what happens if the market moves X percent, Y percent, Z percent in other direction. What's the probability of a loss of portfolio? And they look at a lot of different scenarios and say, if the market moves this much, then everybody will lose 60% of their portfolio. If the market moves this much, they'll lose 40%. If the market moves this much, they'll lose 20%. And they look for those like worst case scenarios and they margin the contract appropriately. It's based on market moves and volatility and other things. So the idea was, what they did was they took the reportable positions, like where the liquidity is. Just imagine liquidity is where your sellers and buyers are. And then they run it through the scenario program and they come up with one number, the margin requirement. It's the minimum they set at clearing. Clearing firms must maintain that margin to allow you to trade the contract. So we get these margin requirements that we always overlooked. We thought, yeah, it's just a number. Who cares? Tradeify charged me $500 a contract. Why do I care that it's $15,000? Well, that $15,000 margin requirement literally tells you the range of liquidity on expected moves when the futures deviates from the stock market's tracking. And when I discovered that, it was an eye-opening, mind-breaking thing. The market moves in discrete intervals. Futures market does, based on that margin requirement. It's so crazy how it works. And I show it to people, and it completely blows their mind. All right, let me show you something really cool. I'm going to go to this table, and I'm going to go here to ES, right? And I'm going to pick this number that says ES margin requirement. I'm going to show you something cool. I'm going to blow your minds, guys. 4175. This is a number based on margin requirements. That's the expected range of illiquidity and a sudden burst of movement in the market, meaning that futures just move on its own when stock markets close during an event, overnight, it doesn't matter. But I'm going to draw a box at 4175. Okay, watch this. And we update that number every single day. It's really fun. Okay, so this is a box of 4175. And the market's just going to love this number. You're going to see that there's a pattern with how the market moves. And I can take this box, right? Oops, I did that wrong. Hold on. 4175. Come on. Okay. All right, that's 4175. And so you're going to notice when the futures market makes sudden, interesting moves, that for some odd reason, it finds resistance some distance away you can calculate from the margin requirement. If that's not cool, yeah, JMath has been here since about those days, right? And he loves, we talk all the time, Machine 3, we talk all the time about the risk interval. We DM all the time about it. We're still researching its effectiveness, right? Rich was here too from back in the day. This was mind-blowing. As crazy as it is, you can move this all over the place and you see it everywhere. There's some kind of interesting structure point that the market just moves in this exact interval a lot of the time. And once you see it, you can't unsee it. There's 4175 there. There's 4175 there. I don't have to sit here and tell you how the machine is testing for liquidity along the distance of the equation that's based on where the liquidity is. The machine is testing liquidity by spanning that distance and pulling back. And then spanning that distance and pulling back. Okay? Look. That started me down a rabbit hole. That was 2016. So what's awesome about this is that the machine shows the structure. They reveal their hand. And that was the first thing I did. And I started an entire trading community on this principle alone. We've had this one thing, and it has spawned into 15 other exploits. It's an exploit of something. There's a reason the market kind of does this. And we explain this in our courses, but there's a reason why the market finds discrete. The futures market makes a little discrete, and it works for every futures contract. It's so cool what it does. And again, it's not based on any hocus pocus. I literally tell you guys, it's based on CME span. They take the expected liquidity or the expected range of where buyers and sellers are distributed. And these risk scenarios are basically telling you that distribution of the risk. And they make that margin requirement where that risk is minimized for all participants, the sum of least risk of participants, which is the name of the book I'm going to write. But on events, the market moves that much. Look, from the moment of the event, literally the moment of the event, that's where the freaking support is, guys, 4175. And when the margin requirements change, that number changes. Even like random breakouts in the market, right? Here's the distance for the day. It moves this distance. The futures market loves that distance. As it's saying is where your liquidity providers are showing risk, The machine is programmed not to exceed that risk on any single move without giving the liquidity providers a moment of breath to mobilize and provide liquidity so they don't bankrupt their own dealers who are dealing cards for the game. There it is. There it is. Any questions? Here to here, here's the breath. Here to here, here's the breath. You give people that moment to rest and test and find liquidity. Let me just keep going. It is uncanny how crazy this is. Okay. There to there. Bottom to top. Okay. Trade by Having's 30% off of Tradeify today. I think ETF is still 80% off too. But so the point I'm trying to say is that there's a magic structure number in futures, and we've taken it to the extreme. There's a lot that this box does. Okay, a lot. If you want to know something even cooler about this box, as years went by, we found out that if you take that same distance, that margin requirement based distance, we call it a risk interval because we needed a name for it. And it makes sense because it's an interval of range defined by the risk of the liquidity providers that are participating. The market just doesn't want to bankrupt their dealers. If Trump tweets something, I guarantee it. If the market falls 200 points, it will move 41.75 first before it continues to fall. There is a brief moment in time where liquidity is mobilized on those discrete intervals, and you will see a little bit of resistance every 41.75 on the way down. It's just the part of the program that pauses the movement and allows, like, it basically allows it like pauses for a second to allow liquidity providers to mobilize liquidity when it wasn't there, to give them the opportunity to take the bid. And they raise the maker-taker fees during that time to entice them to come participate. So this is what we do at Rocket Scooter. You might think that this is a different community, you know, or the same of all kind of communities. We're engineers and reverse engineering the market. That's what we do. Okay. So the next cool thing is you take the close price and you add that distance and subtract that distance. It creates these things called DD bands. This is a whole philosophy of the market. And what we found out is that the overnight, when futures markets move, the stock market they track is closed until here. So the futures have no reason at all to move other than forecasting where our stocks are going to be. But why would our stocks be any different? They close at the last liquid price. Why would futures care to go up or down? Forecasting things that happen in the morning or reacting to things happening overnight in other markets. What we found out is that the futures market stretches that distance when the stock market is closed. The market, it's like a rubber band, okay, or a spring. If you move beyond that distance of that 41.75 in the S&P, the rubber band will snap, and then the volatility goes out of control and the market goes to shit. So the DD band, or the doomsday band, as our members so aptly called it, was a way to predict if the market structure was being broken. It is the perfect long and short setup most of the time. It was my short setup today. It was a long setup yesterday. It was long attempts here. It was a long attempt there, even though it didn't play out. There is pivoting that takes place on these bands with the same exact philosophy, is that there's just buffering of liquidity at these levels, or mobilizing of liquidity at these levels. Every time you touch this band or play through it, there is volume there. Now this is an event, so let's look at one that's not an event. Just walking up to it, there is predictable high volume every single time. Let's find a time it bounced. Predictable high volume, one risk interval below yesterday's close. It became a pivot tool, and every time you touch it from either direction, there's predictable volume because it's the mobilization of liquidity. And once you see it, you can't unsee it. Here's the highest candle out of the blue, out of nowhere, at that liquidity mobilization spot. So as goofy as I am on the stream, you guys might know I'm a weirdo mathematician, and my job is to find tools that exploit things that find volume. All day long, we find volume at these levels. Here's volume and resistance at these levels. There's a time I short and long off these bands, but it's a really, really, really good pivot. And our algorithm puts them automatically for you on the chart. Let me just go back in time and just show you, actually the margin requirement has changed. So back then, the Thinkorswim indicator is off a little bit because when I changed the requirement now, it moves them around. But when this was actually the present day, it was literally right there. So this is just a teaching tool that I use When that number changes to 43, it changes it all 43 in the past, and that's not what it is. So basically, what it is at that moment in time is the band for the day. And you'll see, as cool as this is, we have cheat sheets on how I react around it. It's a very cool bunch of techniques. And what we found was studying that 88% of days will stay in between these bands, which means futures rubber band doesn't snap and detach from the stock market more than 12% of the time. So right here, 8% of days will close below the band, 4% above the band. So most of the time I long at the bottom, and under certain conditions, I'll short at the top. If the stocks themselves are bearish, which they are today, that ratio is less than half, I will short from that green band every time, for the most part. Or take the first short like I did today. If that ratio is bullish, then I don't take the short. On the bull side, I long from the bottom band every single time, because I bet on 88% of days will stay in between the bands, and it's such a fantastic setup. It's miraculously cool how it works. So if you guys like that, that is literally 2 of our 15 tools that exploit something. Every one of our tools is an exploit of something. It's not a price-based indicator or a nonsense thing. This is exploiting margin requirements and turning into actionable pivots for you guys. You want to learn more? You have $1, it's going to cost you $1 to learn more. Come to our courses. Our boot camp is so detailed. It's showing you so every class is going to be a mind-blowing experience for you guys. I promise. You're going to learn stuff about the market under the hood. You're going to learn why your shit ain't working. Why your magic indicators that you bought, your magic algo that you bought, your magic, I don't know, name it. Some guru sold you a $3,000 piece of shit that's not making you money. It's because you got scammed, and they have no clue how the market works, and they're just selling you 50-year-old stuff. If somebody sells you an algorithm that looks like it's based on price action, based on harmonics, based on, I don't know, confluence, multi-time frame confluence, these are all nonsense words that are basically trying to sell you something that doesn't work. Why would you need multiple time frames to prove a confluence of an indicator? Oh, the 1 minute looks good, but the 5 minute doesn't, but the 10 minute looks good, but the 20 minute looks bad, and the 1 hour looks okay, and the 5 day looks great, but the 1 month looks bad. I guess it's a good indicator. Why would you need to have it, to add layer? If it worked, it would work. That's it. It doesn't work, but maybe if you look at it from this angle, and maybe this angle, and maybe this angle, and maybe this angle, you get a better idea. No, you have full flexibility over choosing which candle you want. What's the magic number that makes it work? It's called curve fitting. Any mathematician will tell you it's 2025. Can I use the hard? Can I use the R word again? You're ridiculous. You're a ridic. You're ridiculed. Okay? You're an idiot. You're curve fitting. You're trying to force it to work. I can't say it, I'll get canceled. I can't say the R word, but man, since Trump got elected, I've been wanting to say it every single fucking moment of my day to some of these traders. We all do it, okay? So you're an idiot, okay? You're curve fitting. You're trying to make it work. If it worked, it would work. The realization people have is that it doesn't work. Multi-time frame confluence is the thing that tricks you into thinking, okay, it doesn't work, but maybe if you add a few more layers to it, it gets you a better signal. But if it worked the first time, people, oh, look, it worked. Look at that. The signal was great. When it's not working, they try to figure out a way to make it look like it works. That sounds scammy to you. It sounds scammy to me. If it worked, it would be, here's the level, short that shit. I drew it last night, right? That's the idea. I drew this level, or I drew this level, long that shit. I drew it last night. It's not, well, let's look at 5 different angles or 10 different angles and see if it works. The goal of multi-time frame confluence is to convince you that technical analysis has meaning, and all it is curve fitting. Well, you know what? It doesn't work with the 7 and 20 period, but if I make it a 5 period and a 50 period, it kind of works. What? I don't know about you guys, but the mathematician in me chuckles and cringes at this. Who sells this stuff that believes in this thing? What moron put this together that has no math sense whatsoever. And then what gullible morons buy this stuff that also have no math sense? Trust me that I have no incentive to dump on this stuff other than to tell you that a mathematician thinks that is goofy. My first approach at looking at this stuff when trying to predict platinum prices, it looked goofy. I was like, market's random. I don't see how this can do anything. I don't think we can predict this stuff. Looking at past price and what it did. I feel like the market would move on current events and current motivations, not the past motivation. What if somebody went in and changed something all of a sudden? There's a global supply shortage. Who cares what people did in the past? The market's going to price what's going to happen in the future. How can you use the past to predict the future? The motivations are different. If Trump came in and said, by the way, we're tariff China 100%, the market would completely collapse, irrelevant. Everything before it was completely irrelevant. For the last 100 years of market, could care less what happened in 2008 or 1929. The market is acting on current and future motivations. How do we predict the future? Not by looking at the past. But that's the whole point. And I try to make sure that, like, as a person that creates tools or creates things, I want to find something that has future look to it. Like, can I look into the future? Can I exploit something that's a rule? A mechanical rule is something that's just sitting there all day, and when you hit it, something should happen. So it's a rule. The liquidity map is exploiting principles of liquidity based on options exposure of options dealers. So here's a cool little trick. I long from here to here just about every single time, and I long from there to there every single time. With the exception of I have sit out rules, I won't touch it. The reason, class, everybody that's taken my class before, why did the market not crash from here? You know the answer. Well, I'll tell you, our boot camp is literally $1 to take one class. It's $1 a day. The money goes to pay the sweet girl who's super nice and sweet to us and builds all of our little handouts and our videos. That pays her salary. The dollar goes to her. It's liquid. Ty said it. It's liquid. The market's extremely liquid here. This is called a liquidity pocket based on options. So we use futures pivots of NASDAQ futures or S&P futures, and we look at liquid pockets in QQQ and SPY. This is a liquidity pocket. Liquid markets don't crash. This is liquidity pocket. The market's trying to sell off, but it is very liquid here at the top. Very interesting to see that. And it's also very liquid on the breakout. As a matter of fact, this can go here, and S&P can run another 20 points. The NASDAQ can run 80 points from here. I'm sorry. The NASDAQ can run 80 points from here. It's possible. Liquid markets don't crash. And so the idea was, can we find liquidity and illiquidity? Can we predict volume? And that's where we stumbled upon the idea that you can't predict price, but you can certainly, like, with 100% accuracy, predict volume. And we do it 1,000 times over. We have 15 tools that predict volume. Predict volume. Predict volume. And let me show you something even cooler. You're joining an engineering geek society with 10,000 people. We have 10,000 people, user accounts of Rocket Scooter now. Congratulations, you guys. We broke the 10K mark earlier this year. One of the biggest communities out there for futures. I'm going to show you something really cool. All right. You heard of a volume profile? Last but not least. Volume profile, right? It shows the aggregation of volume at certain prices over a period of time. So right here, as you see, we've got a point of control, which is here. We've got high volume nodes, which is here and here. High volume means liquidity. Low volume means no liquidity. So at these current prices, let's just kind of put this off to the side. First of all, you are finding large amounts of volume and point of control up here near these bands in two places. Number one is this is always high volume, but the liquidity pocket bear zone bottom that I say the market is liquid, which is literally here at the bottom of the space. 518 to 519 SPY or 6009 to roughly 6021 is the most liquid spot on the map. And I drew that at 9:30 this morning. It just so happens that that is the most liquid spot on the map, but I knew it at 9:30, didn't I? So what we actually do with liquidity maps is we predict a volume profile before it happens. You want to use a volume profile to trade right now, you are a step behind me and all of my traders. I can give you the volume profile before the days even started. Right the moment the market opens, I give you today's volume profile. I gave you the point of control. We knew the possibilities. It's amazing how I took the things you guys use and I give you a head start on it. Everything I'm going to do is to give you a head start. Predicting volume is what the goal is. And so I can walk at the start of the day. Watch. Let's play a game. Let's play a game. Give me a random ticker. Give me 5 or 10, just so I'm not bullshitting you guys. I'm about to give you something pretty cool. Give me like 5 random tickers. Just give me a random. We're going to randomly do this. I'm going to take the first 5 you guys type. This is another thing. Don't let people come in there with pre-made. Let's check out this chart that I made. Look how it works. Don't let people show you and pull the wool over your eyes. Give me random tickers now, and I will basically do what you guys said and show you the same thing. Now you know that I'm being fair. And I'll do it live on stream, that I can't edit this. That way you know I'm so confident in this, I'm telling you the truth. Nvidia, okay. I'm going to look at the liquidity map and tell you if there's going to be useful information here. Nvidia, okay, ready? Point of control, probably 132, 133, right at the start of the day. Or high volume node, either way. Let me go back here. Oops. All right, Nvidia. 132, 133 wasn't the point of control, but it is the second highest volume pivot. And I guess the opening price was the highest one. Now, it's hard to say this one because the opening price is always high volume. So excluding the open, his opening price is always high volume. Excluding the open, the highest volume and liquidity was exactly where I said it was going to be. So the rule is excluding the open because it's always high volume. Nvidia's other high volume pivot is right here at the liquidity pocket and at monthly hedge pressure. 132 to 133, 132 to 133. There it is. Okay, number 2. Let's just keep going down the list. Tesla. All right, I'm not cheating. Tesla. Okay. Excluding the open. Tesla. 300. Monthly hedge pressure and bear zone top. Ready, Tesla? 300. There it is. It is the point of control. Okay, next. You guys convinced yet? AMD. I'll keep going down the list. I will get 100 on this test. And you take my $20 boot camp after I do that. 105 AMD. Now, it's very close to the open. It's going to be slightly skewed, but AMD 105. Okay. AMD 105. AMD 104.73. Actually, 104.97. Okay, check. Exactly. I'm sorry. AMD 104.97. Right here where I circled. All right, I'm 3 for 3. Let me put this where you guys can see it over here. A little bit easier. Okay. Hood. You convinced yet? I can predict volume. No time frame. I'm not changing the time frame. Multi-time frame confluence. What the hell is that nonsense? No. 1 minute chart. Here's a line drawn at 9:30 in the morning. And hood, 48 and 49. Massive volume. The monthly hedge pressure break provides a lot of volume on the 49 break. There's the monthly hedge pressure break right here at 49. Any question? And 48 was big volume. It just wasn't as big. Hedge pressure, monthly hedge pressure. Forced liquidity due to hedging. All right, Palantir. I could stop when you guys are convinced. Just be like, Matt, I get it. Shut the fuck up. 91. Palantir. Right up here. Resistance pressure at the top. 90.1. I'm sorry, 90.1. So 90.1 is point of control. And this is kind of an interesting range because it's kind of like all high volume. You're going to have, actually, I missed a couple of these. You have volume at 91, 87.5. And that is, oh, sorry, that's not interactive with. So you're going to have the open prices, a lot of volume. So right about 89. So this is not really giving us the whole thing's a high volume profile because it's stuck. All of this is liquid. So the hardest part to say is that this is liquid, this is liquid, this is liquid. It's all going to be liquid. So it looks like you're going to have a distribution of liquidity all throughout here. But 91 should provide volume. If this does move through 91 through here, trust me when I say your point of control will move closer to that. So it's actually in between a bunch of liquid spots. So Palantir is not really one that's giving you like good sharp pivots here because it's all high volume. That's the one thing. This is all high volume everywhere. See how the volume is very high all through this. So there's not really, it's very small, minute differences, but you'll see like that lower right here at Like 89.6 is right here at the half gap. There's your somewhat higher volume here at half gap. You have the open price 89, which is your open price, and then hedge pressure is going to be your bigger one. 91 is going to be where that volume is if it passes through it. So wait on this one today and come back and check it out at 91 as it interacts with here. That'll be high volume pivot. Okay. Couple more. Chewy. Okay. Chewy has not interacted with anything yet. So Chewy's going to be only just probably volume down here. It's going to be a little random and spiky. You interact with your liquidity spots, there will be volume. So this can be a high volume node. This can be a high volume node, but it's likely going to be just like Palantir, a kind of even distribution of no clear winner. Okay, Chewy. Yeah, so like no clear winner yet. This is just random, so we haven't really approached, but when you get close to 36.5 and 37.5, you'll see a lot of volume. Again, this is random noise. This is in a spot that is really hard to predict, so nothing yet. When you interact with those pivots, though, come back and check it. So usually we're looking for ones that interact with the pivots to show you those are going to be high volume nodes. This is predicting high volume nodes before you get there. So I'm trying to look for ones that actually qualify as something really good. Like BABA is an illiquidity pocket. There's going to be some low volume inside of here, but 140 might show a little bit of volume. Again, this is not going to be a clean one either, but maybe 140 on this guy. Yeah, so this one isn't. Your 140 is here, but like I said, once you break through and become irrational on a hedge break, the volume becomes a little sporadic, and that's one of our rules here. And as you see, the sporadic volume is all through here, as people are getting squeezed, so that you're not going to have a good read, as I told you. But at least on this one, we know that 140 is going to be a very clean high volume pivot. And your 140 was right here. Big high volume pivot there. Okay. And I keep going, a couple more. Meta. Okay. Yeah, that is a great example. There's your pivots here, here, and here. All right. Yeah, Meta is going to be fantastic. 675 is your point of control. Meta, monthly hedge pressure. All right. Give or take. Yep, and here it is. There's your monthly hedge pressure. Okay, 678 somewhere in here. Oh, your liquidity pocket was your point of control. Okay, so we had liquidity here, so 680. There's liquidity. 675. There's liquidity, and there's your point of control inside of this really high liquid range. And as a bonus, like 667, there should be a little bit of high volume possibly here. And there it is. Okay. So the neat thing about finding liquidity is mapping out where the volume can be based on different principles of hedging, etc. And you're going to see that what's neat about this is forecasting where volume can be. And each time you touch these levels, there's going to be a volume spike. It's a pretty cool trick. I mean, it's really neat. And liquidity map was like my way of, can I predict where volume is going to be based on options? And it turns out you really can. It's very rarely, if anything, it very rarely fails to predict volume. So SPY really doesn't have a pivot nearby, but we are seeing that pivoting action here because there is futures resistance, and this stuff all mirrors each other, which is really neat. All right. Pretty cool. Thank you. So the goal was, with this, was can I use margin requirements to predict high volume pivots? This is, can I use options to predict a volume profile? So now I just trade where the volume is. And my rule is I find liquidity and I do what? Long it. And I find illiquidity and I short it with bear conditions. And that's it. Simon Dean, totally right. Make love to it, baby. Give me the long. So the cool thing about our group is our methods are very different. And I'd love to invite you guys to take the boot camp. In the 20-day boot camp, yeah, this is what it covers. Okay. The boot camp actually trains you on trading principles. And it gives you, let me show you. It gives you, we go on 3 different parts of the boot camp. I'm going to show you what it is. Okay. We train on 3 different things. Number 1 is actual trend identification. People call it the you're shorting too much rule, but you're shorting too much, and I'm going to prove it to you. So you're always against the trend because the trend is mostly up most of the time, and you're usually shorting too much. So number 1, how to identify the actual trend, the greater market, what we call it, Is the market actually bullish or bearish? Is it bullish or bearish today? And are there bull or bear pivots today? Which one should I take? You're usually flip-flopping and shorting too much instead of joining the trend, and you doubt the trend. Number two is the thing that makes you fail the most is you bet too big. And this is what most of our classes focus on, is betting principles. It's not a class on technical indicators or anything or chart reading. It's a class on position sizing mechanics and day trading mechanics. If you read the reviews, people are like, there's nothing like this, because nobody's ever really invented a trading course. I've never seen one. I've seen a chart reading course. I've seen an indicator course. I've seen a options mechanics course. I've seen a I go long here, I go short here course. None of that's trading. It's charting. A lot of that is just wrapped up in here. Trend identification, where you long and short, big whoop. And that's not trading. Ours is like, you know, 10% this and literally like 80% this and 10% the other one. This one is all about betting principles. Why I bet small, why I sit out, why I bet medium. What are my confidence in setting the size of the bet? How to bet, where to double down, where to stop out. Where do I do cost basis management? Where's my exit target? How much do I bet? How much percent of my account I lose? It's a betting strategies class. And so what you guys will learn from a master poker player is they're not going to tell you, please wait for the royal flush, and then you win. They're going to say, if you get two aces, or if you get two jacks, and he has a 10 and jack, right? Right? Or he has a 10 and maybe he has the other jack that I need. How much should I bet? I see the cards on the table and I know what I have. I have 3 jacks and there's 1 there. And probably he has a jack that's very low. Should I bet bigger? Because I'm likely to win with 3 of a kind or something. They understand the odds, and betting against the odds is what you're going to do. And our class is all about this. We grill on principles of understanding how to find the trend. And in class number 1, I give you a 100% guaranteed winning trading strategy. I reveal it right out the door. There's a strategy that never loses in the stock market. It's a hypothetical thought experiment, but it never loses. You have infinite dollars and infinite money, the strategy always wins. I've never found a case where it doesn't win. So it's neat. We start off with it. And then we teach you how to actually bet. It's a hypothetical to prove that the reason that you lose in trading is that you're betting too big. It's not because you picked the market wrong. You're going to pick the market wrong half the time, trust me. But how do I pick the market wrong and still make 85% of my trades are winning? And I'll show you how I do that. It's by betting. I can turn losers into winners. I can bet against the trend and be winning because I'm positioning correctly based on the understanding of the risk I'm taking. So you're betting too big for the risk that you're taking. And the third thing you do is you have no market avoidance principle. And this is huge because there's certain times you just avoid the market altogether. And now is one of those times. There's reasons I'm avoiding the market because I have rules that have convinced me to do that. So we train you on when to avoid the market and how to bet correctly and how to identify the trend. Our indicators are 10% in the class, even though there's 15 of them. And I'll show you what we cover. In the curriculum, so there's videos and there's handouts. Liquidity maps has position sizing on it. Resilience is a gap fill predicting indicator. Monthly map is what I use today to say the bear market's coming back with volatility in March. These are my strongest bull setups. You saw me trade this one today and this one today. We have ways to read the command of traders. So you can identify liquidity in the futures markets. We have the DD bands, which is one of the trades you saw me make today, just further detailed. This is an exploit. Each one of these tools is an exploit that predicts volume. This is one of the trades I made. I made this trade today with that heavier position at the start of the day. Trade plan execution, dynamic hedge pressures. These are high volume pivots. Irrational markets, when to sit out. Risk interval on VIX. This is when to sit out. Things to know about futures, liquidity pockets, and every single time trades. This is again the trade I took today. They're all setups and they all have position sizing guidelines and conditions to go with it. It's a class on betting. Nobody out there teaches a class on betting. They teach a class on curve fitting and chart reading. It's so weak what the trading education community does because I don't think really good traders stop to teach a class. And why do I do it? Because I'm a weird, on the spectrum, fucking math nerd, perfect SAT weirdo that likes to sit here and beat the game and share it with people like Elon does. He likes to rub in people's faces how smart he is. That's probably why I do this. I feel like I'm doing something awesome. And I want people to celebrate it with me. And that's why we do it. And I don't need to make money because I make 7 figures a year already. I don't need to sell a trading class, so it's $1 a class. And again, that just covers the overhead of the cost of running the class. So the $20 that people pay just pays someone's salary. It doesn't. I could charge thousands of dollars for a class of this magnitude. I don't care to do it. I would give it away for free. If I gave it away for free, though, it'd be filled up with gambling knuckleheads that interrupt the community. If you pay $1, you tend to take it more seriously. And this is probably the most serious time that you'll take it analyzing the market and kind of where you are. And I'll let you guys know after 3 days, you can ask for a refund if you don't like it. And the people that have taken the class, we needed a giveaway. All right, people taking the class donate classes for other people to take. They pay it forward. It's so crazy. We've given away like 20 classes. We're about to give away one right now. So let's get ready to go. All right. You guys are gonna love it. And like I said, what I want you to learn from these classes is one thing. I want you to learn that everything that you are taught out there is likely bullshit and not the thing that's gonna get you to your goal. The one thing I want you to take away from the class is the ability to critically think. And as an engineer, I train you guys to critically think. How I train you is better than what I train you on. All right, type in the words. Free class, one word. You passed your 5th ETF eval. Let's go, baby. Someone out there does a class on how to trade today. They'll be there to hold your hand and help you trade. That is a good. Thank you. Okay, type in free class, one word. And the goal is that we want to teach you guys how to think critically. And the point is that you're going to see when people are selling you something and be like, what? What is this? And it makes you really start to like see everything for what it is. When people come out of our class, the first thing they say is, wow, everything everyone else teaches is exactly the same. And it's all like hocus pocus. I'm teaching you how to see the market and what actually moves the market. You come out of this knowing exactly what moves the market. Liquidity, or selling against illiquidity, or buying against illiquidity. These things move markets and keep markets stable. And we teach you how to find volume, and that's all that matters when you're trading. So, free class is going to give you a free, this is the last giveaway we're doing, but if you want to do the boot camp, the classes are recorded, you get the handouts, and it's only $20 for the whole entire thing. As cool as that sounds, 300 or 400 people take it every 20 days. And that just pays someone's salary. So, y'all are supporting the platform here. And it looks like if you did short that DD band, you got lucky. I didn't take it. I could have, but I didn't. Very nice. Okay. And we are gonna roll this contest. Edge pressure. Bam, bam. Why don't you find that volume? Are you guys ready? I'm testing this out. All right, free class. Everybody type it. 2 free classes. Bruce paying it forward. Holy crap. Thank you, Bruce. All right. We have 2 giveaways. 2 giveaways. All right. If you guys donate 3, I'll give 2 away as well. So we have 2 people so far. All right, we're gonna do the drawing. But if somebody gives away a 3rd one, I'll give away 2 more. I'll pay for it. The money printer, baby. All right. 10, 9, 8, 7. Y'all love the song. 6, 5, 4, 3, 2. And it only goes out to people that are non-members. Remember this. If you already paid for it, you already got it. 1. All right. Galen Gifford, if you are here, you got 41 seconds, man. Type something in chat. Victor, you're not Galen Gifford. Galen Gifford, the countdown. 30 seconds. Galen Gifford. The moment that Galen Gifford regrets getting up to take a leak. I'll give it like 10 extra seconds because of the delay. Galen Gifford. He's running back with his coffee. He hears his name from across the room. I'm going to count to 20. I'm going to give you 20 free seconds. Galen Gifford. 19, 18, 17. All right, we're going to play another one of the songs. 15, 14, 13. Galen, hurry.
Matt fires up the rocket scooter. Day trade swings like a wild commuter. Charts dance jig and stocks go higher.
Maybe Galen went number 2. I don't know. All right. Sorry, buddy. You ain't here. What's up, Natalie? We're going to roll it again. Hey, what's up, dude? Wait. Pips, don't you already have this? Bro. Don't you already have this, though? Aren't you already a lifetimer? You never won? I thought you were a lifetime. For reals? Bro. Oh. Trade for pips. Cool. I thought you were a member. That's okay. You just been here for a while. I do know. Thanks for the donations. Yeah, of course. One more. Ready to go? All right. So what you're going to do is if you guys win, it's Victor. So yeah. So if you guys win, I'll tell you to get Sean Hood. Maybe I just don't remember who is and isn't a member, but I know Sean's been around for a little bit too. I feel like I'm riding like in a stagecoach, you know? Yeah, yeah. All right, that's it. Anybody wants to donate one more, I'll donate 2 more for 5 total. But if we're only at 2, we're only at 2. Once the song ends, that's it. I don't know. I have a love and hate relationship with this song. I love it. I just don't know what to do with it. All right. All right. Thank you. Oh, okay, Spec. All right, cool. All right, you did donate 1. Okay. You guys want to hear the winning Rocket Scooter theme song? Okay. This is it. All right. 3 more, and I'll pay for 2 more of you guys. I'm donating $40. Canadian dollars? Maybe. See so much better like this. All ready? Canadian rupees. Freddy Contreras. Are you here, Freddy? Ready? This is the best part. Awesome, Freddy. Good job, buddy. All right, you guys can come. It's at 3:30 today. It's live. It's 20 days, and we go straight through it, but the videos are recorded. It's the last giveaway we're going to do for this series, so you got to jump in and take it if you don't want to. If you don't want to wait. We repeat it every 20 days and we start over. So the goal is to teach people so that you guys don't run out there and get bullshitted on in this industry, okay? Good job. All right, I'm paying you guys $40 so you can come. I'm inviting two people to come in and chill. Black Beauty Machine. That is a powerful name if I've ever heard one. Are you here? The machine, dude. I love the word machine and the aspect of trading. I can't see with these sunglasses on. Natalie, you blew your account, so you need help? Send me a DM, Natalie. In Discord. Hold on. Black Beauty Machine. Machine, you here? Are you here, Black Beauty Machine? He or she? Is he or she here? Ten, 9. I'm gonna the eraser ready. 8, 7. The sunglasses for show don't really do a good job at letting me see this like dark text. 8, 7. I can't see. 6, 5, 4, 3, 2. Black Beauty Machine. Regrets leaving their computer for a hot moment. No. Okay, hold on. All right, the other song finalists, the 2 lifetime winners, by the way. And we'll have like an award ceremony for you guys. I'm gonna put it together and be nice. So yeah, so here's the other song that was the winner.
Market spinning in chaotic haze. Rockets
all right.
blast through the maze. Volume
I love the name Machine though.
Leave the doubt and the fray. Liquidity map paints the scene.
Scrum. Ain't you remember? I know you're there. You just joined. Scrum. I know you already remember, dude. That I do know. All right. That I do know. Scrump is in there every day. You guys are so... Y'all are so funny. All right. I am going to have to give it away. Keep spinning the wheel. Gregory... Gregory James. I need to just take the sunglasses off. I can't see anything. This song is lit. Yeah, this was the other winner. This was Jen, and she wrote the lyrics. Let's go, baby. Gregory, let's go. All right. Cool. One more. 5, 4, 3, 2, 1. Victor can't see his name on the winners list. Don't worry, Victor. It's there. In spirit. What's up? What's up? Retirius. Awesome, guys. Okay, here's the roll. Congratulations. Good job. Okay. Pips, I'm so glad that you're joining, man. I always thought you were a member, but I guess I get you confused with my other friend, Pips and Ticks, which I thought It's another friend of mine. Hold on. Okay, so here's what you guys are gonna do. I'm gonna give this to good old Slacks here. Go to our Discord. Everybody, step one. Go to our Discord if you've never done it before. Hold on. Step one. Love you guys. Go to our Discord. Hold on. Y'all want to hear that song again? It's pretty dope. All right. Everybody get here. Just join the Discord if you haven't.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray.
I gotta set up my workout for today.
Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineer to see the light. Illuminate the darkest night. Rocket scooter.
Everybody get to our Discord. If you've won, I need you to message Slacks and say, hey, this is me. I know Victor's gonna message him and say that it's him. All 5 of them. But seriously, be like, hey, this was me from today. 6:15. Okay, hold on. I gotta do my workout today.
Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads no fear. No more guesswork, no more loss. Seeing past the others cross. Institutions will be seen. Predict the flow like a machine. Rocket scooter, you've got the key. Pull back curtains, let me see.
Where institutions high.
Doubt can't live where you reside.
Hey Slacks, it's not me. The song is good, right? Yeah, it's really good. So the lives are gonna be at 3:30 Eastern. Let me turn this down. So we try something new every time to go with the classes. This time we're doing something really fun and it's really effective. The videos are pre-recorded. So now what we're doing is we're watching the video together and then I'm annotating while the video is live. Like I'm pausing and giving examples as I'm watching the video with you guys. So this is a whole different way of doing it. So it's like I'm teaching it live and watching it live with you at the same time. I love this dynamic. It makes it really fun. There's no goofiness. There's no theatrics. Like, you know, I try to be silly on the stream. But on the actual training, it's very much by the book. And it's very well designed to be training you on something. All right, guys, thank you for participating. That was fun. 5 free classes today. So at 3:30 Eastern, we go live in Zoom. Once you go through all the steps of getting access, you'll get access to the Discord. Welcome to the community, you guys.
Doubt can't live where you reside.
Exciting, guys. Even if you can't make it, it's recorded, Dillis, so you can get the recording. So the courses are recorded. It's the same quality as watching it live with us. So the boot camp is $20. It's all 20 classes. I'm gonna teach you volume prediction techniques, how to find a trend, how to bet properly, which is the majority of the classes, and how to use confluence. That's not multi-time confluence, but confluence between actual confidence indicators, which is what these numbers are, to determine how confident you are in that trend that you identified. And therefore, I bet smaller when I'm not as confident, bigger when I am. And I also learn market avoidance techniques. And we're going to teach you day by day all these different techniques. Today's class is going to teach you how to find and predict liquidity in the market. It's a part 2 of yesterday's monthly maps class, which goes over monthly maps and commitment of traders together. So yesterday's class was mind-blowing for some people, because we showed you how in January that we said February and March would have unusual volatility, because monthly maps can show you this. And right now, the monthly maps is not giving us any forgiveness on that analysis, that the market looks very weird through March as well. Volatility is likely still here and not going to be super bullish going forward. Looks like Trump might be talking or something. I don't know. There's a little bit of resistance in selling here, but the bull market is all but pretty much wiped at this point. Monthly maps has set it for the last 3 or 4 days. We've just been waiting to watch the rest of the market fall apart and seeing what's going to happen. I'm a little concerned going forward. The tandem part of this video, part 2, is to use the commitment of traders again to find the trend. The trend right now is not up anymore. It might still have green days in the red, which I still find bull trades in this messy thing. But I also know that I understand that this is the time that the market's not going to big breakout rallies, right? We'll be back tomorrow. Yeah, cool, Jim. Come back tomorrow. So yeah, Natalie, if you have questions about trader funding programs, I can certainly help. Send me a message in Discord. You guys send me your friend request. Here we go. I got a message. Let's talk to this person. Hold on. Let's put the music back on. Let me explain to you what my life is like, you guys. I'm sure you guys will do the same thing. It's a pleasure meeting you. I noticed your profile on a mutual server. How your trading activity is progressing? Not good, man. Oh, never mind. I can't have fun with this troll. What the fuck? Oh. Oh, man. I was going to see if they can let me copy their trades. Well, that was not fun. All right, never mind. I had planned a whole thing. I had a whole bit planned for that. Goodness. I got robbed of some really good comedy. Either send a message or drop a message in the Ask for Help channel. Say, hey, Matt, send me a DM, and I'll send you a DM. But remember, I won't DM you anything else. When you join any Discord server, you will get like 40 different versions of me DMing you. I promise you, it's likely not me. Like never. Unless I'm telling you, I'm gonna DM you. What's up, Jenny? Hey, I'm gonna say, I will DM you. You will get 90 different Matts being like, hey, how's your trading going? Sorry to hear that. The good Lord sent me to help you with your trading. By the way, check out this crypto site or something. Some bullshit crypto thing. So I will never DM any of you. Trust me. I don't like any of you that much. I like you, but I don't like you that much. I'm not going to talk to any of y'all on the side. That's your thought. Like Matt's weird and doesn't like people, so he's not going to be talking to me. Don't think that's Matt talking to you in the DM. Unless I tell you I'm going to DM you. So message me in the channel that says ask for help. And I'll be like, let me DM you. And then I will. You get fooled by that all the time? I saw you in a mutual server. How's your trading going? I'm usually like, man, not good. I need some help. I just have fun with it on the stream. I like you, Smirk Trades. I love you, man. Smirk Trades won the winning. We're at the winning song. The Rock's your theme song. Yeah, pay attention to how many Y's are on the hay, or how many T's are in the mat. You know, how many A's and 4s and 7s are in the word mat. It's like usually never mat, right? It's like M4TT, and people still get fooled by it, right? I have some really horror stories of people I know that got scammed by fake mats. There's some really, like, in the financial world, you have impersonators all the time. There are 20 fake Twitter accounts, 20 fake Instagram accounts, 20 fake Discord accounts of me existing right now, messaging everybody. Yeah, even Slacks too. There are fake Slacks. Even Slacks is getting it. So Andrew, our mod, there's fake Slacks out there. Hey, thank you for joining the Rocket Scooter community. By the way, click this Discord link. This is our secret Discord that nobody knows about. It's not the one that's Rocket Scooter. It's this other one that's AB123789110. And you're just like, is that Natalie from YouTube? Okay, I got you. Like, watch this. Ready, Natalie? Hey, Natalie. Real Matt here. I need a, you know what I do? I'm gonna tell you guys, we need a code word. I'm gonna do the code word to authentify ourselves. Come up with the word that I can tell people in the DM that you know that it's me. And I'll use it forever. And it must be PG rated, so don't give me something weird. Peaches. Pickles. Ah, okay. Now, Pickles kind of has like, even though it's the name of the dog, it might sound weirdly sexual if I start telling people the word pickle or feet. God damn it, guys. Something that can be perceived as something weird and overtly sexual. I'm messaging somebody saying, hey, nice to meet you, pickle. You know what I mean? Don't put me in the hot seat here. No cucumber, no feet shit, no meat, no taco, no steak, no medium rare. God damn it, you guys. Listen to me. The goat. Big meat taco steak foot. Honey. What's that baby doll? All right, cornholio. All right. I don't think there's a code word here, but we'll just say. I was going to guinea pig it on Natalie. Hold on. Gandalf, Mayo. I think this is a failed effort, guys. I thought I was trying to do something nice, but I don't think I can come up with the right code word. That isn't going to sound weird at the start. Like somebody that doesn't even know that we came up with the code word would be like, hey, it's Matt from YouTube. Watermelon. They should be like, what? What's going on? Okay, I'll just say real Matt here. All right, good. All right. I'll chat with you after the stream. Any questions you have? Liquid Matt. Y'all are so funny. Okay. Red Rocket. Hit the like button. Yeah, that would actually be the best one. Hit the like. Hey, Matt. That can be never nude. Oh, my fellow Arrested Development fans in here. I knew you were here. I was hoping that you would be here. Chris M. I know that we exist. There are dozens of us. Dozens of us. Dozens. Are there any other never nudes in this chat? You know you're you if you are. You have to tell me. I know there's dozens of us. If you get the joke, you'll get it. There's always money in the banana stand. the analrapist. Yep. Oh, by far, like the funniest show ever made. Computer Blue, Chubby. Yep. Her Bland. Put a logo at the end of each email for your signature. Annyeong. Now you're gonna make me marathon Arrested Development again. These are Arrested Development jokes. If you've never seen it, it's hilarious. When he goes, I'm the first analyst therapist. And they analrapist. Oh, the puns in that show are so good. Blah blah blah's law blog. Oh yeah. Best series ever canceled by Fox, and they've canceled some good ones too. I lost track of how many times they canceled Family Guy and Futurama. Am I doing live futures trading? Yeah, we are. Order her the milk steak and jelly beans. I'm sure they'll press her on the first date. So I goes to my other favorite show. How much cheese have you eaten, Charlie? I don't know. How much cheese is too much cheese? Any amount of cheese before a date is too much cheese, Charlie. That's a good one. Bob LeBlaw's Law Blog. Gene Parmesan. So what would you like to order? How about the milk steak? Nobody even knows what that means. Okay, remember they filling out the dating app for Charlie and they were like, what's your favorite food? Ah, milk steak. What? I'm just gonna put steak. What other hobbies do you have? Ghouls? What? You know, little green ghouls, man. What do you like, Charlie? Knees. Or, you know, what don't you like? People's knees. God damn it, Charlie. I'm gonna put snowboarding, okay? Little green ghouls, dude. Anyways. You don't care for Job? I thought that Job was a cool part of the show because, like, the running gags, like, Job had all those little side shows where, like, he had, you know, Ben Stiller was the other magician. And, like, he was always getting in trouble. Like, the gag written around Job was funny, though. He's a magician that gets blacklisted from the Magician Alliance, so he can't even play birthday parties because he's not official anymore. Because he accidentally gave away a trick. What a funny, like, while, like, you know, Will Arnett might have been, like, the character you liked, but like, the character was funny. Like, the whole premise of the character was hilarious. Like, rich, spoiled, you know, kid and, you know, mediocre magician. Illusions, Michael. Tricks are for whores. Oh, you're doing the line from Lucille, but oh yeah, I don't care for Job. Oh yeah, when she said that, that's right. I thought you were saying you didn't care for him. I thought he was I thought his character was funny. You gotta pay the toll to get into the boy's soul. I gotta say it, so the algorithm doesn't find it, but you gotta pay the troll toll to get in. Hey, troll, what you say? Hey, troll. Hey. Okay, listen, this is a good trading day today. Monthly maps are looking really solid for a bearish type market. I'm gonna be very cautious today. Nvidia earnings, like I said, we'll talk about the range of this. Nvidia earnings can move the market, the S&P roughly 100 something points. The range is really gnarly on this. So be very cautious today. The planned volatility for monthly maps, like you can see that going into after this Friday, Nvidia is built for a massive amount of uncertainty. I mean, the span range is ridiculous. Hundreds of points of Nvidia. Nvidia could be one of those particular stocks. Now, this week, it's roughly 144 to 130, about 15 points on 130. So Nvidia can drop significantly to the low teens, to the high 50s. So this is like all hinging on one stock. The stock market, but it's not just Nvidia that looks bad because we looked at other things yesterday. Like JP Morgan looked bad on the monthly maps. We looked at a bunch of banks. Banks are just straight illiquidity pockets going forward in next week. The only things that did look good were like Nike looked all right. Walmart looked all right. Nike is straight bullish. Nike is clean for whatever reason. Nike's surviving. Walmart looked pretty decent as well. Nice bull territory. A little bit of volatility in Walmart, but it still looks kind of okay. But there's a lot of stuff out there that's like looking really bad. All right. So anyways, class at 3:30 today. And I got my workout class booked for today. Back into getting all healthy again. I'm gonna do I got yoga tomorrow. I'm gonna have a pretty good week. I'm gonna chill. Good day today. Whatever this was, 70 500. I can't remember the amount that I won today, but it's a good trading day. Excuse me. 70.76. Not bad. So everybody, let me tell you something. Last but not least, I'll tell you, I promise. The community is going viral for a reason. There's a reason that you guys just found us on trending and stuff, because we are kind of trending. The class, the receptiveness of the class has been fantastic. You can read the reviews. There's like 70, 80 reviews. They're all 5-star scores. You blew yourself. Arrested Development. Tobias jokes are always the best jokes. Come to the class. 3:30 Eastern will be live, or you can watch the video and follow along every single day. Do one class a day for 20 days. At the end of 20, we start all over. It's only $1 a class. The reason it's $1 a class, like I said, I'm not in the desire to sell a trading course. For money. I want you guys to learn and save your own money. The trading course is really good for what it's designed to do, is to train you on thinking like a trader more than train you anything else. The thought process, you come out of that analyzing the market kind of differently. We give you tools to find volume, find liquidity. With the major principles of I find liquidity and long it, I find illiquidity and I short it under certain conditions. And so with those particular mindsets in place, we teach you betting strategies, risk management, position management principles. We teach you market avoidance strategies, and we teach you how to identify the trend correctly based on order flow prediction, which is the other thing we do, this liquidity map stuff. It's a really neat trick. It's a good layer to anything else anyone does. And again, not investment advice, but traders typically are running in the dark. And this is a time that retail gets a little power back in their hands. We're using institutional positions to find information about the market. And instead of guessing, instead of being in the dark, we're trying to take a stand at identifying liquidity, just like a market maker would. And betting at the right spots and managing your position. You will find through your journey that the one thing that puts you over the edge to being profitable is 100% based on how well you manage your position, how big you bet, where you stop, where you add, where you close. Not about picking the direction right, not about picking the stock market right, not about guessing the trend for the day right. The market has gone practically nowhere since we've opened. I made one long and one short trade based on my principles alone. They both were winners. I got lucky. Took like 3 losing days in a row, and then I had 2 winning days in a row. Trading is not about getting the market right. You get the direction wrong sometimes, but losing with grace, losing the correct way is part of the game. To survive when you're wrong, if you can learn to survive when you're wrong, ultimately the money will come. As a famous trader once said, and I'm paraphrasing, the only way to make money on Wall Street is to not lose money on Wall Street. Okay, I'm out. See you guys in the Discord.